Let's do this thing. Hello, everybody, and welcome to ATP Insights, where we cover just the most important tech news in Asia. Gosh, today is Thursday, the 6th of August, 2026. Let's get right to it. We want to talk about a bunch of things today. Grab's $235 million profit report. It's only part of the story. We also want to talk about, could physical AI be Southeast Asia's real advantage? And then finally, BYD, this should not shock anybody, takes over in Singapore as Toyota lays off staff. I didn't think those two things were going to be related to each other. Okay. We will also have, as always, an unbelievable lineup of guests today. We'll be joined by Shivek, Sachdev, Managing Director at ServiceMind Asia, to discuss how intelligent property management platforms will improve the economics of building operations. Next, we'll talk to Tobias Leong, co-founder and CTO at Axium Industries, to cover how autonomous supply chain intelligence will improve the decisions and operational performance of industrial businesses. And then Jonas, Schleypen, co-founder and CEO at Hoc-trade, will talk about how behavioral AI will help trading platforms improve client performance and build more sustainable customer relationships. This is right up our bailiwick. Looking forward to that as well. Later in the program, we'll be joined by Ilman Shazhaev, CEO and founder at Dizzaract. There are lots of Z's in this, lots of Z's, to talk about how distributed AI infrastructure will lower the cost and increase the sovereignty of AI-powered businesses. And finally, Ajinkya Bhat, founder and CEO at Seamless XR, will join us to talk about how objective diagnostics and decentralized care will help healthcare providers scale rehabilitation without scaling their workforce. And before we get to all of our guests and a bunch of news today, let's hear from our presenting sponsor, Twilio. Twilio is the secure and scalable platform to build amazing customer engagement without the complexity, with the AI-driven workflows you need to connect. They are trusted by over 300,000 businesses. It's the platform that simply makes more things possible. Visit Twilio.com to start building today. Let us get to a bunch of news today. Let's talk about Grab's $235 million profit. We'll go through some details there. It's only part of the story. It's hard not to say that Grab delivered a strong second quarter. I'm going to go through some details here. Revenue rose 22% to almost $1 billion, $997 million, while on-demand GMV increased 21%. Martin, we can hear you typing. To 6.46 billion. Monthly transacting users reached 53.9 million, up 17%. With spending per user increasing 3%. Yeah, I know from my own Grab usage, the prices are going up. They definitely are. Something that cost me, 40 baht, yesterday cost me 105 baht. The business is growing through a larger user base rather than relying on existing customers to spending more. Well, my personal experience does not fit into that, but one of my favorite teachers always told me, don't ever generalize from your own experience. The reported $235 million profit, though, I think we need to put this into a little bit of context. Grab generated only $19 million of operating profit. The final number was lifted by a $307 million non-cash gain created when Grab revalued its existing Superbank investment after taking control. There's a lot of stuff going on with Grab that makes me feel like, in the old days, I used to talk to some of the insurtechs and some of the fintechs and say, if the mobility companies, if the ride-hailing companies can start fintech businesses, well, then why can't the fintech businesses start a ride-hailing business? In the sense that it's really software, like there's not a lot of CapEx involved. I mean, sure, there's software development involved there, but now with the ability to write that software because of Claude Code or Codex or Cursor, and Martin and I talk about this all the time. Frankly, we were talking about this literally just before we turned on the live recording today, that building software like this is actually not as hard as it used to be. Shouldn't a fintech start a ride-hailing business? And yet, if you look at Grab's numbers, maybe there's a reason why the fintechs and the insurtechs always decided not to do that. A $66 million deferred tax benefit provided another boost for Grab, and these gains were partly offset by a $177 million fair value loss on financial assets, things that they hold, and some liabilities. Grab has warned that these accounting movements will continue to make net profit volatile. My translation of that is they're just not sure when they're actually going to turn a real profit or a big profit for sure. And this has been true about Grab the entire time. I mean, if you've listened to the way that we've spoken about it, we've been slightly Grab skeptics. That's just us. We're not always right. We're not always wrong. But this is something that we've been talking about for a long time. While to be fair, the underlying business is becoming more profitable. Adjusted EBITDA, right, rose 54% to $168 million, with the margin increasing to 16.9% of revenue. But we're not sure like which part of the business is adding the revenue to here, nor which part of the business yet is creating this profitability. Deliveries produced $96 million segment adjusted EBITDA, while mobility generated $191 million. Let's do some math there. That's $287 million in the mobility business and the delivery business, and the revenues were $997 million. Financial services remained loss-making, although its adjusted EBITDA loss narrowed to $15 million. They're still investing there. And cash generation, so cash out versus cash in, was less impressive during the quarter. Operating cash flow declined to $56 million. Adjusted free cash flow fell 35% to $73 million as capital expenditures increased and working capital requirements rose. The trailing 12-month figure remained much stronger at $450 million. But again, you're going to see these sort of volatile inter-quarter moves in the Grab business. I don't think we're close to that ending actually anytime soon. Now, Grab itself is becoming a much larger lender. Its gross loan portfolio, and if we had told you, to be fair, a year ago, 2 years ago, 3 years ago, at the founding of Grab, that its loan portfolio was going to be $2.32 billion, which is nearly 3 times the level it reported the year earlier, you would have been shocked. And even without Superbanks, this acquisition that helped them actually reach what looks like profitability, even without that, the portfolio doubled. Customer deposits across Grab's 3 digital banks reached $2.5 billion. That's not bad, actually. Financial services revenue grew 59%. Just think about that. Financial services revenue grew 59% to $134 million. That business has not been around nearly as long as their mobility and their ride-hailing business, and yet the revenue there is almost the same size. It's 2/3. Let's do that. Let's do that math in our head a little bit. And Superbank, which is an acquisition, right, that they've made, is kind of central to what's happening here in their financial services business. It appears to me over time, and I've been saying this for a while, right, that Grab is going to be less and less a mobility business and more a fintech business. You can just watch this happening over time. The upside in the fintech space is way bigger in my mind than the upside in, and they haven't even started to tap into this. So the question is, how great is their expertise going to be? And if you're in the fintech space, and if you're a fintech executive, if you're a fintech expert, are you going to choose to apply your skill set to Grab, which has all these other businesses? It's trying to be a super app. I mean, at some level, nominally, it is a super app, right? Are you going to apply your expertise at Grab? Or are you going to do it at a company that's very focused, laser focused, I would say, on just the fintech space, where you could potentially have more impact? I don't know the answer to that question, but I think it's something that's definitely worth thinking about. Okay, Grab's direct and indirect ownership moved above 50% for Superbank, turning the Indonesian digital bank into more like a consolidated subsidiary. And I think that's important to note here too. Superbank had more than 7 million customers by June. That's in Indonesia. There are 270 million people in Indonesia, but 7 million customers, not bad, with over 60% also connected to Grab or OVO. Its gross loan portfolio reached approximately $758 million. I think the world in Southeast Asia just wants to be a fintech. Grab is therefore moving beyond the economics of just being a marketplace for delivery and a marketplace for mobility. It is adding the funding requirements, credit exposure, and regulatory obligations of a regional financial institution. Again, something we've been saying for a while, something to which we need to pay attention. It's not a startup. Grab is not a startup anymore. It's not. It's been around for a long time now. But at some level, it's not even really a mature business yet. I think at some level, it's trying to figure out, what do we really want to be? And I think if you sat in sort of the senior C-level meetings and even the board level meetings at Grab, you would hear conversations like, are we really a fintech? Should we double down on that? Are we a fintech that has a mobility business, or are we a mobility business that has a fintech? And what's the comp for this? Like, what is the comparable company? I don't even think Uber has a fintech business that's as big as Grab's, or that's as prominent as Grab's. We'll get to that at a later date. So What does the 230, let's dig a little bit deeper. You know, we like to kind of give summaries at first so we can get a sense of where we stand and what we're talking about. Then let's dig a little bit deeper here. What does the $235 million profit report tell us about Grab's recurring earnings power? Well, it confirms, at least at some level, that Grab has moved beyond the large operating losses that defined its earlier years. Look, I mean, they've done a really good job at actually cutting costs, lowering their investment numbers as well. And again, while it's not Amazon in the year 2002 and 2003, it's at least a similar kind of strategy, right? It does not represent $235 million of recurring operating earnings. We said that, like, a lot of this stuff has to do with the way they're doing some accounting treatment. The clearest IFRS measure of the underlying quarter was the $19 million operating profit. That's $19 million on $997 million of revenue across the board in the company. Huh. Yeah. What is that? 2% margin? My math is not that good off the top of my head. Adjusted EBITDA provides a stronger view of the operating direction. That increased by $59 million year on year to $168 million, so better. Even after the regional corporate costs rose to $104 million. And those costs increase partly, not entirely, but partly because Grab is spending more on cloud infrastructure and its internal AI systems. We did an entire segment about Grab and the 7 places where they are trying to invest in AI across the board. And again, they're going to have to make a decision themselves. What kind of company are they? Because we see what Meta, and again, it's hard for me. I struggle to call the company Meta because there's nothing Meta about Meta. It's more like Facebook with AI. Maybe they should change the name of the company to Superintelligence. That would be a way better name. And since they bought a company that does superintelligence, maybe that's what they should call it. But again, that's a story for a different time. But for Grab, they're going to have to make a similar decision. Are they an AI company? Are they a fintech company? Are they a mobility company? Are they some combination of each? Is it a third? It's hard to say right now. But they're going to have to make a decision, right? Because if they're going to make an investment in a ton of artificial intelligence initiatives, they're going to have to figure out where this stuff lies in the context of when this company is going to finally generate consistent profitability and frankly, consistent revenue. Net profit itself will remain difficult to interpret over time because Grab's convertible securities and financial investments must be revalued regularly. They're going to have to mark this stuff to market. And since all of those assets are not publicly traded, and some of them are liabilities, right? Those adjustments affect reported earnings without creating equivalent cash movements. So this is just marking to market some things that they have on their books. That stuff can go up and can go down. And that is sort of market related, things that Grab itself cannot control. Operating profit and cash flow will therefore give a cleaner picture of recurring progress, right? So if you strip the other stuff out, and let's get back to what that is if you're paying attention to this stuff, their convertible securities and financial investments are going to be revalued regularly. And that is why operating profit and cash flow will give a much better picture of the recurring earnings that they have. But again, at some level, from an accounting standpoint, doesn't necessarily mean, because even as their recurring profit, if there is any, continues to go higher or goes lower, they're still going to be impacted from an accounting, from the IFRS standpoint, on what the value of those convertible securities are and some of the other investments that they've made. Now, the other question we have to ask ourselves is how much of Grab's on-demand growth is now supported by operating leverage? Well, revenue and GMV, right? So gross market value grew at almost the same rate. That's interesting, actually. While adjusted EBITDA grew considerably faster. So deliveries also expanded its adjusted EBITDA margins to 2.3% of GMV. Which, again, just think about that. 2.3%. Think about your own business. How proud are you of your own business having a 2.3% EBITDA margin? I don't know. That's something you need to ponder. Now, it does show that scale is beginning to translate into stronger economics, but not much stronger. Mobility's margin remained broadly stable at 8.6%, despite higher fuel costs. But again, fuel costs, if you're smart, can be hedged. And to be fair, outside of the United States, we don't see drastic changes, right, in the price of fuel, because fuel, and even where I live, in a country where there's natural gas, where there is some oil, where there are big oil companies, and Malaysia next door as well, the gas prices are heavily taxed. Oil prices are heavily taxed. Energy prices are as well. And what that means is that the prices don't necessarily need to change that much over time. Grab spent more to support driver supply, which helped monthly active drivers increase 19%. But the margin did not expand. It held while the network grew, and that's interesting too. Total incentives, so discounts, I like how they call these incentives and not discounts, rose 29% to $706 million on revenue of $977 million. GMV compared with 10.1% a year earlier. So just a little bit higher, almost 1% higher, but not exactly, 80 basis points higher. Some of the growth was therefore supported by heavier marketplace spending. And I would say that if you want to look at this going forward, one of the next tests is whether user growth can remain strong as incentive intensity stabilizes. Look, Grab has been subsidizing its business with investor money for over a decade. Excuse me. And the real question is just how long can that continue to happen? How long? How long is the market willing to forgive Grab for having to incentivize everything? And like I said, something that I normally pay 50 baht for, I paid 105 baht for yesterday. Now, to be fair, 105 baht is not that expensive. Right, I live in Thailand, so I have the benefit of being in a sort of a low-cost, low-price country. That's good. But still, the price was double. And I did the exact same thing that I always do. I went from the exact same place to the exact same place, almost at the exact same time, and the weather was not an issue. Right, it wasn't like it was raining. It never snows here, so it wasn't snowing either. It wasn't too hot. It wasn't too cold. It was the same weather that we always have. There were no exogenous factors that I understood. And I remember when I looked at my phone and I thought, I'm booking this thing at double the price. I was in a hurry yesterday. I mean, to be fair, I'm in a hurry every day. Massive time constraints. And one of the reasons why I had to take the Grab was because I had to get to a place really, really fast. I could not wait. Okay, so I just said yes. Couldn't take a car because the traffic on Sukhumvit Road, so in Thailand, is actually, it's not bad, but there is some traffic. But taking a motorbike was the way I had to go. Okay, now, how does Superbank change the financial risk inside of Grab? Well, Grab now controls a business that takes deposits and carries loans on its own balance sheet. Again, are we a fintech or are we a mobility company or are we some hybrid? It's a really good question. The financial statements of Superbank will increasingly reflect credit provisioning and banking liquidity rather than only the economics of matching customers with service providers. So this is what Grab was doing before, right? They were saying, we have a bunch of service providers that we can connect you with. And we have a bunch of people that want to have some sort of financial services given to them that they're willing to pay for. What is that actually going to look like? Grab's net impairment loss on financial assets increased to 72 million from 33 a year more, so more than doubling. And this on its own, what does it really mean? It does not indicate deteriorating lending quality because the loan portfolio expanded really large. We said that they have over $2 billion of stuff in their loan portfolio. That's not small. So it doesn't necessarily mean like this increase on financial impairment losses, right? From 33 to 72 doesn't necessarily mean that their financial assets are bad. It does show that credit costs are becoming a material to the group's reported operating result. And again, this is also very important to me because you take a company that was started with a bunch of mobility experts. That was the whole point, right? We understand the car business. Our families in the taxi are connected to the taxi business. We've watched what Uber's done in the region. This is about around the founding of Grab. We're going to try to outperform everybody. We're going to focus on this. We're going to focus on getting great drivers. And then when they move into the delivery space, we're going to focus on getting the best vendors onto our delivery platform. We want to make sure that when people receive something from Grab, which I do periodically, but not as much as probably most people, that the quality is high and that we can count on it. And then if it's not high, we take them off our platform because people need to trust what's happening on the Grab platform in the same way they need to trust what's happening on the mobility side of the platform, on the driver side of the platform, right? On the ride hailing or the bike hailing side of the platform. That stuff's important. But now it's changing because now they're going to have to focus on this fintech because this is way bigger and way more risk, to be fair. Once you start running a loan portfolio in the billions of dollars, now you're starting to run a business that's way more risky than simply I say in relative terms, than simply running a mobility business and a ride-hailing business, which is well understood and well known. And to be fair, it's not like the banking business and the lending business isn't well known. But to have this stuff grow, those 7 million customers in Indonesia, I don't personally have the credit data on them. But one of the things that fintech is trying to solve, not just in Indonesia, but in Southeast Asia in general, including Thailand, and not really in Singapore, but to be fair, there is an underbanked and underserved cohort in Singapore as well. And when you start to build a loan portfolio that's based on the underserved and the underbanked on alternative credit assessments and alternative credit data, you run the risk. It's not necessarily this way, but you run the risk that you're creating a loan portfolio that's much more risky. And again, it moves away from Grab's core competency, which is moving stuff around. Whether it's moving you from one place to another place, from your home to your office, from your office to your home, from your home to going out to dinner, from that dinner back to home, to building a fintech business and running a financial services business that is premised on the fact that you're trying to serve the underserved and the underbanked at scale when you've never kind of been in the banking business before. And there's an insurance component to this as well, but the insurance component is more tied to like their own businesses. You may notice when you book a Grab that you always have the option to like book some insurance that's associated with it for a bunch of different reasons with a bunch of different expected outputs. Anyway, Grab says that its non-performing loan portfolio remains stable, fair enough, and that expected credit losses improved relative to the size of the portfolio. We'll have to take that at face value. Superbank, which is part of this acquisition story that we just talked about, separately reported a gross NPL, non-performing loan ratio of 1.6% for the first half, down from 2.7% a year earlier. Not bad. Indonesia's wider banking system reported a gross NPL, so non-performing loan ratio of 2.14% in March. So Grab's a little bit lower, Superbank's a little bit lower, and these figures are good. They're good. Although differences in loan mix make direct comparisons imperfect, and that's the point I was trying to make before. It's like, we don't know, we don't have detail yet, okay, on what that loan portfolio composition looks like. So we can't make a proper analysis on whether it's short-term riskier, less risky, minimal risk at all, particularly in comparison to other people that are in the same space. Now, financial services is expected to reach adjusted EBITDA profitability during the second half of 2026. But again, that's not real profitability. We can cover that later. The quality of that profitability will depend on whether credit costs remain controlled as that loan book goes from $2 billion to $3 billion. There's a lot going on with Grab. And again, to be fair, if you had told me that I would be talking about Grab having a loan portfolio in its financial services business of $3 billion, I would have been just as surprised as you were. Now, here's the big question for me, at least today. What should determine, or what can determine, whether Grab's capital allocation, this idea of where they're investing their money, into which businesses that they're forming and that they're building, is creating lasting shareholder value? Grab raised its revenue and adjusted EBITDA guidance partly because it will now consolidate Superbank and Stash. The higher outlook therefore includes acquired earnings as well as organic improvement. Just remember that word, acquired earnings. They bought some earnings, right? Separating these contributions will make the underlying growth rate easier to judge. The additional $750 million buyback authorization of the stock brings total authorization since 2024, and that's 2 years ago, to $1.75 billion. Grab had $5.4 billion of net cash liquidity at the end of June of this year, and the balance sheet can support their buyback program, although an authorization does not require the company to spend the full amount, but it's a signal, right? And it doesn't send a bad signal either. If you're a shareholder in Grab, a buyback is actually good for you, unless you're the one selling the stock back to Grab at a price that you don't like. Share-based compensation for Grab remains significant at $62 million for the quarter. Their total Class A and Class B shares outstanding were approximately 4.08 billion at the end of June, almost unchanged from a year earlier. And the practical measure of the buyback is going to determine whether the total share count begins to fall after employee dilution. Now, look, Grab is trying to fund its financial services expansion while returning capital to shareholders. This is always going to be like a very nuanced and slightly tricky balance, right? They're losing a little bit of money on everything that they're doing while they still have cash in the bank, and they're trying to then return some of that cash to their investors. Their large cash position, which I mentioned earlier, makes some of this possible. But the longer term evidence is going to come through higher operating cash generation and improving earnings per share, rather than the headline size of the buyback program. Okay, let's move on to our second news story today. Could physical AI be Southeast Asia's real advantage? Now, Southeast Asia's AI story is starting to move beyond software that generates text and images, right? We could sit here and talk a lot about generative AI, creative AI in the image and both the text generation space, but physical AI places intelligence inside machines and industrial systems that can observe conditions, make decisions, and act in the real world. This region has a credible foundation for this shift. ASEAN attracted $226 billion. Yeah, sit down when you listen to that number. Of foreign direct investment just in 2024. That was 2 years ago. And most of that capital was connected to new projects, none of which come online immediately. Right? And this is the reason why we go back and we look at what happened a couple of years ago to determine where we are today. Most of that capital, as I said, was connected to new projects, which gives companies an opportunity to build automation into facilities from the beginning rather than retrofit it later. And by the time we reached 2024, and this build out starts in 2024 and 2025, and now as we move into the middle of 2026, there are a lot of places where you can actually imbue artificial intelligence and embed artificial intelligence into these physical projects. And this is something that's happening, I would say, more in Southeast Asia than almost anywhere else in the world. And there are already some meaningful signs of adoption. Singapore has 818 industrial robots for every 10,000 manufacturing workers, making it one of the most automated economies in the world. And I think this is always going to be the way this works. And I'll tell you why. Singapore is a country with approximately 6 million people, but it outperforms in almost every other metric. Whether it's financial services, whether it is the intelligence economy, or manufacturing and artificial intelligence embedded into that manufacturing, Singapore just continues to outperform. And even a place like Vietnam, whose robot installations increased by 27% in 2024, Malaysia wants to convert 3,000 of its facilities into smart factories by 2030. The thing is that unemployment, at least in most of the region, is so low, and there's a lot of what I would call employment mobility. You look around the region, right, and you look at the people that are doing these sort of factory jobs across the board, and they're not all natively local people. There's a lot of migration across borders, actually, whether it's from Myanmar into Malaysia, Myanmar into Thailand, India into Singapore, right? All of this stuff is Philippines into Singapore. There are a lot of workers moving a lot of places in Southeast Asia, and that's also very important. Capital is following the broader global movement. Robotics startups raised $18.8 billion during the first part of 2026, already more than the $15 billion invested during all of 2025. So think about that. During the first part of 2026, it was $18.8 billion. The whole year of 2025 was 15. We could be more than double this year. Southeast Asia's companies are beginning to participate in these types of investment. Thailand's, and we did a whole segment on this, I think, a few weeks ago. Thailand's Amity Robotics raised $7 million in July, while Singapore-based Deconstruct announced a $125 million Series A. This region is deeply involved and deeply embedded into artificial intelligence, particularly in the manufacturing sector. Now, the commercial argument for this, as I've mentioned, is super straightforward, I think. Very straightforward. Industrial customers can measure whether artificial intelligence improves output, reduces defects, or prevents downtime. That's pretty easy to measure, particularly if you have some IoT component to it where there are sensors everywhere and artificial intelligence embedded inside those sensors. It's very easy to measure. And that produces a much clearer purchasing decision than many consumer AI products, right? So if you're a consumer, like, how do you measure all this stuff? But if you're a factory owner, if you're an industrial business, your ability and your understanding of what the impact, what the ROI is on your investment in robotics. And again, when I say robotics, don't think about like humanoid robots walking around a factory floor, although that will happen as well. But just think about robotic automated processes. I think they call it RPA. But that's a different thing too, robotic process automation. That's not exactly what I'm discussing here. But there are places where robotics, whether it's from cleaning or manufacturing or across the board in the region, particularly in Singapore, where this stuff is happening. And it's just so much easier to measure that usage. And that usage can be high, for sure, across the board. However, I always say, like, we're in the early innings of this. That's just the old American person in me thinking about baseball and thinking about baseball analogies or metaphors. Deloitte found that only 5% of companies currently regard physical AI as transformative. But again, 5% is a pretty big number considering, as I said, we're in the really, really early phases of this, and just 3% have integrated it extensively, which leaves another huge swath of the economy in Southeast Asia that is going to want to be able to do this. And that's why physical AI could be Southeast Asia's real advantage. We're not there yet, but we're moving there for sure. And the main barriers, again, because we're in the early innings, so remain cost, trying to find the right use cases for it and test there, limited talent as well. But again, I think all of this stuff gets disintermediated really quickly, quicker than most people think. Now, the real regional opportunity may therefore be less about producing a Southeast Asian humanoid robot. This is what I've just mentioned, right? In the sense that there are plenty of companies working on humanoid robots actually in Southeast Asia. Some of them based in Singapore, some of them based in Thailand, for sure, a ton of them based in Japan. Japan's been in the robotics business, whether outwardly or secretly, for decades. I always cite the same company, FANUC. Factory automation and numeric controls is what that stands for. And they have been building robots that build robots, like I said, for decades. So don't underestimate that as well. And the expertise that they have is going to be transferred and transported into humanoid style robots as well, kind of across the board in Japan. Japan actually ends up, and I don't want to spend a lot of time talking about it today, but Japan ends up being a really unique market for robots and particularly humanoid robots and humanoid robot testing. For not the least of which reasons is because Japan loves robots, right? They've had Aibo, I think, which is a dog robot forever. And also you've got a falling population, an aging population, and like nobody's having babies in Japan. And to be fair, very few people, at least in comparison in relative terms, are getting married. So creating babies is getting harder in Japan as well, which means that there's going to be continued population decline. And the only way to fill the jobs in Japan, because it's not a high, like, let's have people immigrate into the country kind of country, you will see robotics there actually become, I think, really important. Now, what gives us this structural advantage in Southeast Asia, not just in Asia in general? And the real reason is that the region already has customers. One of the first conversations I ever had with Martin, which I still cannot get out of my head, and I don't mention as much as I used to, but it's still there. It's like, why don't you have any clients? And it wasn't a mean question. It was actually a thoughtful question. And this question is easily answered in Southeast Asia when it comes to robots and robotics. We already have them. ASEAN has become a major destination for new manufacturing investment, whether it's in the Eastern Economic Corridor in Thailand, whether it's in Malaysia, Indonesia. We already know that the Vietnam economy is heavily focused on that as well. And physical AI companies can develop products alongside operating factories rather than searching for theoretical applications. Again, as we mentioned before, hundreds of billions of dollars are being invested in the region in new factory places. And instead of retrofitting an existing factory, which could be 20, 30 years old, embedding artificial intelligence into new factory automation processes in a brand new factory is just so much easier and so much more efficient. And Singapore itself, as I've mentioned already, provides a really advanced testing environment for this too. It's high robot density. What do we say? 800 and something robots for every 10,000 workers. Give startups access to experienced customers, technical partners, and production data. And Singapore, we'll talk more about Singapore later, is also connecting robotics companies with industrial operators through government-supported deployment programs. I cannot talk positively enough, and you cannot argue with me against this, no matter how hard you try, about just how great the Singapore government is at looking forward and creating opportunities for its local economy to do things that have not been done before. Okay, when I say that Singapore provides an advanced testing environment, I mean it. And to be fair, even if that environment didn't exist, let's say 6 months ago, the government is super proactive there on all fronts, not just on the robotic front, but across all fronts. When they see a new trend happening globally, they try to get out in front of it. They try to create government entities that can help companies there. They try to create subsidies and incentives for companies to participate in those markets. Singapore, because of the size of the country, which to me is like the optimal size for any country, email me later if you disagree with me, or frankly put it in chat and tell me that I'm wrong. But Singapore is really, really good at this. Vietnam as well represents adoption growth too. It's 27% increase in robotic installations during 2024. Again, 2 years ago, right? Suggests that automation is spreading alongside the country's expanding manufacturing base. That is not going to end either. I would say this too about Vietnam. While it's not on the same level as Singapore, I think from a relative standpoint, the things that the Vietnamese government does in relation to supporting the innovation, particularly the technological innovation inside that country, is really powerful and will continue to be so. And in Vietnam as well, they've also done a really good job at educating their population, their young population, in technology. And if you look at a lot of the, just to remind people, to be fair, if you look at a lot of the outsourcing companies from a software perspective and a software building perspective, which now means the AI developments on the software side perspective, a lot of those companies sit in Vietnam. And one of the reasons why is because the technical talent in Vietnam and the technical education in Vietnam has continued to improve over time. And I don't think that's going to go away. Not this generation, for sure. Malaysia, again, another important country in Southeast Asia, is creating demand through industrial policy. Its smart factory target in 2030 gives technology providers a defined market rather than relying on voluntary adoption. Yeah, you're just going to have to include Malaysia in here as well. Look, I live in Thailand, so I'm biased, but I mean, the whole modus operandi of the Thai government when it comes to innovation. I actually saw somebody today walking outside with a shirt. No, last night, sorry, on my way to dinner. It said NIA on it. And I was like, yep, that's somebody who works at the National Innovation Agency. Okay. There's also a Ministry of the Digital Economy. There's an entity that's responsible for the development of manufacturing and S-curve industries in the Eastern Economic Corridor. I know that because I worked with the Thai government on this stuff. Very impressive stuff that's happening down there. If you drive through the Eastern Economic Corridor, you see warehouses and factories everywhere. And I'm talking about modern facilities. I'm not talking about stuff that was developed 30, 40, or 50 years ago. Some of that stuff still remains. But again, the Thai government has been pretty amazing at supporting what's going on in the EEC. I don't think that's going away either. Now, Singapore also has a really deep research capability. Some of the other markets offer larger production bases, but maybe have weaker technical talent. Although, to be fair, I think it's hard to compare the technical talent across different countries. I think all of them are doing a really good job. And to be fair, we travel a lot in this region. Japan, I think, obviously is very well known. And I want to leave China out of this, as I always do when we have these discussions, unless we're having a specific conversation about China itself. Right. And while China has very good relations and frankly does a lot of business cross-border between China and Southeast Asia and all the countries in Southeast Asia, right? Whether it's Vietnam, the Philippines, Singapore, Malaysia, Thailand, Indonesia, Burma, Myanmar, right? All of these countries do a ton of business with China, but let's leave China as a separate conversation, particularly from a development and innovation standpoint. The region here should be understood as a connected industrial system, not as a single uniform market. And I will say that too, that because the countries in Southeast Asia, I don't want to call them developing economies because you're going to get the wrong image, particularly if you're listening to this outside of Asia. You're going to get the wrong image about what these economies are actually like. Again, as I've said before, I live in Thailand, so most familiar with that, but Singapore as well. Very, very sophisticated technology economies. Very. And Thailand and Vietnam, which I've mentioned before, have a very, very strong and very sophisticated manufacturing base. But again, these markets are not monolithic, but very well connected. And let me just do something really quickly. I haven't done this in a while, but let me just do this really quickly. Total population in Southeast Asia. I would have said 670 million, but let's see if my numbers are close. Now it's over 700 million. Kind of makes sense since the 670 number was from like 6 or 7 years ago. But again, don't think of it as one monolithic market, but do think of it as a very well-connected market. And that's actually really important. Now, one of the things we talked about was, can physical AI produce a clearer return than consumer AI? And the results here can be tied directly to operating performance, I think, if you really sit down and you think about it, right? A production system can measure cost per unit, defect rates and equipment availability before and after deployment. And to be fair, if you apply artificial intelligence to that, you should get some really good output. Existing deployments show substantial gains when you're using artificial intelligence. HP's Singapore production lines, they do some production in Singapore, reported a 20% reduction in manufacturing costs after adopting advanced digital systems. This should not be surprising to anybody, right? If you use artificial intelligence and all of the data that gets created with these new production methodologies, you should be able to squeeze some productivity and reduction in manufacturing costs from this. It also recorded a 70%, as I mentioned, improvement in productivity. And look, I know this. We talk about this all the time separately when we talk about my experience at Goldman Sachs. Okay, we did a business that we automated. We automated the portfolio trading business at a very high level. And frankly, at a very low level too, like kind of across the board. But we did some very, very great automation. This is 15 or 20 years ago now, 2006. Yeah, 2006. But that automation, I don't even have numbers in my head that could tell you how much more productive we were. But I would say this, it's way more than 70%. If my numbers, it's probably like 10 times more productive. Yeah, because we were doing like $400 or $500 million of business a day. And that switched to like $3 to $4 billion a day of execution. That doesn't even include the kind of risk that we were able to take because we understood how to do like data analysis and automation on the risk trading side as well. The point is that if you have the right data, if you have clean data and you have data that you can trust, if you have the right automated systems in place, your productivity can increase in a way that is almost unfathomable. And the recorded stuff that I talked about that HP was talking about in Singapore, these outcomes came from a broader manufacturing transformation rather than just like one implementation of one AI product. But they demonstrate just how positive and how, what's the right word, how impactful the size of this stuff can be. And to be fair, the value often comes from taking existing equipment that's doing an existing job and applying artificial intelligence to them, particularly in the newer factory installations. Physical AI does not always require replacing an entire facility. I mean, think about it. If you have modern equipment and you can apply modern artificial intelligence and data analysis techniques directly and embed it directly into the machinery and to the manufacturing process, you should be able to have a huge productivity gain and way lower cost base for the manufacturing of your products. AI inspection systems can also be added to current production lines, making adoption easier to justify financially, right? That makes a lot of sense to me. And customer expansion provides another signal. Some companies reported 230% revenue growth and more than 1 million production trips during 2025. That data now allows us to analyze this in 2026. And the Bhat, which is a company that reported some of this, said that existing customers were moving from initial deployments into much larger rollouts. This is something we talk about a lot here as well. And that is Southeast Asia actually moving faster than the rest of the world when it comes to not just testing where artificial intelligence can add value, but once it understands where it can add value, particularly in the manufacturing and in the industrial space, rolling that out, deploying it in a way that can be much faster than it can in other places in the world. A repetitive process with expensive errors can support a very strong return when you apply artificial intelligence to it. And to be fair, a highly variable process may require too much engineering to justify deployment. But again, we're getting to a point where software, the creation of the automation software using artificial intelligence, again, getting back to the conversation that Martin and I had before we went live today, just makes look, in the old days, you would have an individual process, okay, that just was too expensive to automate. You knew it could be. You knew you could apply software to it, but you wouldn't because it was just too expensive to do the one-off aspect, the one-off nature of the fact that, like, oh, we can't just develop automation software for this one machine or this one production run. But now you can. Now you can test it pretty quickly. And now you can write it pretty quickly. And now you can write it in a way that's way less expensive than it used to be. And a lot of businesses and a lot of companies in the industrial and in the manufacturing space are doing that. And I think that's actually going to be pretty transformative. And that's actually very, very important as well. Okay, let's get to our third topic today. And then we'll move forward with some stuff. So this is actually super interesting to me. And Martin and I have hinted at this before in other contexts as well. BYD, for the longest time, I thought, because a lot of the BYD cars seem to be named after like sea creatures. Like there's the BYD sea lion, there's the BYD dolphin. And I remember when I first started talking to people about BYD, somewhere in my head, the merger of like the dolphin car, the name of the car, and the name of the company kind of merged into one. And somebody asked me, what does BYD stand for? And I said, build your dolphin. That was wrong. But anyway, let's talk about this, because BYD has essentially taken over in Singapore. Now, Borneo Motors, whose parent company, we'll get to that, is Inchop, which is a British company. They're Singapore's authorized distributor for Toyota and Lexus. They retrenched so they fired an undisclosed number of employees on July 30th this year, which was not that long ago, last week, right? And the affected employees were told on the same day that they finished work. The union, of course, had been notified in advance. This is just based on the regulations that exist in Singapore. And the company committed to severance terms covered by its collective agreement. Now, look, neither Inchape, I think is the way you pronounce this, which, like as I said, is the parent company of Borneo Motors, which has the franchise in Singapore for Toyota and Lexus, nor Borneo Motors itself has said that BYD's growth caused the layoffs. I don't know. We can have a whole conversation about causality and coincidence, but let's just say that it feels like it was caused like that to me. So Borneo's InShape's Asia Pacific business recorded a 7% organic revenue decline in the first half of 2026, and its regional operating margin fell to 3.5%, a drop of 320 basis points. So for those of you not ingrained in the financial world, 300, it's funny this way. I say 320 bips because I come out of the financial services business. That's 3.2%. Now, the group recorded £64 million pounds, of adjusting items, primarily related to restructuring in APAC. So their business on the whole, not just related to what's happening in Singapore and to BYD, is being restructured, and they've exited 13 smaller regional contracts. Australia also was identified as a main source of weakness. And the change in Singapore's car market, I think, is really, really significant. And I want to back up a little bit because, look, I have been a very, very strong component of, how can I say this? The potential for the car business. So there are two structural things that are going on. I mean, there are way more than that, but two structural things that I want to talk about right now, or at least that I want to point out. For the longest time, the car business itself, let's just call it the automobile business, yeah? But I mean, most people look at it as just cars, but there are trucks out there as well and a whole bunch of other mobility possibilities. Has just been looked at as a way of to get from one place to another. But when we first started talking about autonomous vehicles, what year are we in? 2026? Yeah, this is way back in like 2014 and 2015. When we first started talking about this over a decade ago, one of the things that I said was the more autonomous that vehicles become, the more useful they're going to be as productivity platforms and connected platforms. Now, you can make the case, because back then there were no conversations about robots and robotics, particularly humanoid robots, being as productive or as prevalent or as ubiquitous as people expect them to be. You can't say like cars and automobiles ubiquitous. They're everywhere. They're on every street. They're in every country. They're in every city. They're in every town. That's not a controversial thing to say. But robots aren't there yet. They're definitely not ubiquitous. But when they do become ubiquitous, they will all be connected. This is the same thing that I've been saying about the car market, and maybe I was 10 years too early there, but it's better to be early at least than wrong. But the point is that the reason why I'm saying this is because for some reason, Toyota, which essentially invented the electric car market with the Prius. It's a hybrid, but still, they were the first company to successfully put like batteries into cars and make them ubiquitous, make them everywhere. Priuses exist everywhere in the world. Everywhere where Toyota sells cars, somebody is driving a Prius. That they missed the part about this, that somehow that the electricity inside the car now allows the car to be a connected device. Right? Maybe we had to get to Tesla first and maybe Tesla benefited from being in California and seeing everybody carrying an iPad around. But Tesla said, hey, maybe the car should be like an information device, not just a mobility device. But it was too expensive. Sure, it was subsidized by the government. We can talk about that later. But one of the things that BYD did was they said, we have a blank slate. We're going to look at our automobiles. And if you've never been in one, so if you're listening to this from outside of Asia, you may have never been in a BYD. When I go to the airport, somehow I would say I get lucky or I get fortunate that I get to ride in a BYD. And these cars are nothing short of amazing. Both from a ride, just from a traditional automobile perspective, meaning super comfortable, very nice to ride in, very easy to drive apparently, because I've spoken to the drivers about this. But also from a connectivity and from a platform perspective, I think BYD has figured this out. And I think this is going to be one of the big differentiators going forward in the automobile market and frankly in the mobility market, because whether you're riding an electric scooter or driving an electric truck, you're going to find that having those sort of connected device services inside the car, and it's more than just like having access to your favorite online newspaper or having YouTube inside of your car, being able to watch Netflix for your kids in the back seat. It's going to be way more than that. Think about the sheer amount of data, not that your car is generating or that your vehicle is generating, but that all of the vehicles on that platform, you have to think about this as a platform now, are generating. And then what can be done with that data to help you both drive the car, meaning get from point A to point B, whether it's something simple, and I can't believe I'm saying this is simple, but just like generic mapping. And again, I'll put you this way. I was in a car last weekend, I believe, and I needed directions. So I looked on my phone, I got some Google Map directions, and you could tell that the 5 cars in front of me were all going to the same place because they all made the same turn, which was an alternative turn according to Google Maps. So it's just always interesting to watch that kind of thing happen. Anyway, I think one of the reasons why, besides the cost factor, and besides maybe the design factor, BYD, I think, has done a really good job of creating a platform. And I think we'll see that going forward. But let's get to some of the numbers before we get to our sponsors and our guests. Okay. Or our next sponsor and our guests, because the guests are actually pretty incredible today, as usual. As I was saying, the change in Singapore's car market is still significant. And I think Singapore is a pretty good metaphor for what's going to happen in the rest of the world. And again, if you've heard me talk about this, if you've heard Martin and I talk about this over time, it's interesting to watch the market change in real time as you're literally like walking down the street and seeing. And this is true, I think, in Singapore. If you live in Singapore, you tell me if I'm wrong, right? Or put it into the chat. But if 10 years ago you walked down the street, something like 15 to 20% of the cars driving around were Toyotas. You know that. Whether it was a Toyota minivan, a Toyota Camry, a Toyota Corolla, a Toyota Yaris, whatever it was, there were a lot of Toyotas on the road. I'm not saying there aren't any Toyotas on the road in Singapore now, but Singapore, again, because of its size, it's a great way to measure like what's happening in the broader market. And I also know from walking around in Bangkok, again, a big metropolitan area that's very wealthy. People can buy any kind of cars they want. There are Mercedes, BMWs, Porsches, Ferraris, Lamborghinis, every stripe, Teslas, every stripe of car you want exists in Bangkok. And I've really started to see way more of the BYDs and some of the other Chinese electric car manufacturers or hybrid car manufacturers as well. And I think that I can corroborate at least what I see with my eyes in Bangkok is similar to what's happening in Singapore. Let's look at some of the details just so we can get some data and you can get an understanding for what this actually looks like. Okay, give me 1 second so I can get to some of these, some of the stats. Toyota's registered 7,876 cars in 2024 compared with BYD's 6,191. Toyota was still winning. In 2025, BYD reached 11,000. Not double, but boy, almost double registrations, while Toyota fell small. Right, in 2024, Toyota was, what did I say, 7,876? In 2025, it was 7,466. You didn't see like a big structural change, but you did see a big rise in BYD's registrations. And BYD, again, just from a mathematical perspective, moved from 14% of the market to almost more than 21% in 1 year. Just think about that. That's a real bona fide structural change. And the gap continues to widen. During the first half of 26, BYD registered 6,008. That's just during the first half of 2026, okay? BYD registered 6,828 cars, representing just over 25% of all new registrations. So it went from 14% in 2024 to 25% or more in the first half of 2026. Toyota registered 3,386 cars across authorized and parallel importers, giving it about 12.5%. So Toyota went from, what was their percentage? Singapore's broader employment market also provides some context. Retrenchments rose to 4,500 in the second quarter of 2026, the highest quarterly figure since 2020. The Ministry of Manpower said most of the increase was driven by business restructuring rather than a broad economic downturn. But again, you still see BYD out there massively outperforming. Now, how materially has Toyota's position in Singapore changed, and what can we learn about it for the rest of the region? Well, the market leadership change is substantial, as I've mentioned. BYD registered almost 3,700 more cars than Toyota in 2025. And a year earlier, just a year earlier, Toyota had been ahead by nearly 1,700 cars. The first half 2026 figures show that the change has continued. BYD registered slightly more than twice as many cars as Toyota and accounted for 1 in every 4 new registrations. That's 25%, yeah? And I think the product mix is actually just as important. Almost all BYD registrations were fully electric, so not hybrids. Okay, Borneo Motors, again, the authorized Toyota dealer, remained heavily weighted towards hybrid cars, not cards. Recording 2,082 hybrids, but only 188 fully electric cars during the first half. That's really important. Okay, let us get to our second sponsor today. Let's talk about Boomi. Boomi is the data activation company for artificial intelligence. Boomi powers the agentic enterprise by bringing data to life across your business. Trusted by over 30,000 customers and supported by a network of 800 or more partners, Boomi helps organizations of all sizes achieve agility, efficiency, and innovation at scale. Martin, let's bring in our first guest today, Shivek Sachdev. Hey man, how are you? You can hear me okay? Awesome. And you're Singapore, yeah?
I'm in Thailand. I'm in Bangkok.
Oh my God, even better. I think I know some of your family.
Oh, it's a very common last name.
I know that, but you don't know who I know, so don't do that to me.
Okay.
Don't do that. We can talk about that offline. It's great to have you here. We wanted to have you on to talk about how intelligent property management platforms, which is the part that leads me to believe that I know some of your cousins. Anyway, okay. Look at you now. You're like, maybe you do. Maybe you've been at dinner with them. Anyway, can improve the economics of building operations. But first, tell us a little bit about ServiceMind Asia.
So basically, ServiceMind is our flagship product. We started off migrating existing workflow on the Oracle database from on-premise, on server to on cloud. We were lucky to start this off at around just right before COVID. So about 2019, when things started to turn out for the worst. Mm-hmm. So it's pretty much a prop tech that many buildings in Thailand are using right now to manage their engineering and their property management workflow.
So what does that mean? Does that mean, are you still using Oracle technology on the back end and providing services on top of that for companies? Or did you rewrite some of the software because of the way artificial intelligence has come out and said, like, we can lower our costs and increase our margins if we build some of the software ourselves? What happened?
So what happened was we migrate entirely out of Oracle, right? So Oracle was actually our main obstacle because it runs a very tightly coupled application architecture, as you probably know. So at that time, we were still, cloud was still everything that people talk about. There were no conversation about generative AI or even machine learning at 2019 in Thailand, just to be very precise.
Yeah,
so
fair enough.
we rewrote everything. Yeah, we actually had to rewrite the entire application.
So what does it look like now? Like, what were you actually rewriting? Because in my mind, like a lot of the buildings, and if I go back to 2019 and frankly back to 2000, I also live in Bangkok. Yeah, so all joking aside, but a lot of people that I know in the property management business and the property business as well would have told me that like a lot of this stuff still happens either on paper, on spreadsheets, or even just like an informal phone call. It's like, hey, what are we doing? How much does that cost me? And blah, blah, blah. Okay, let's fix that for next Saturday, whatever that means. What does this software look like that you've written? And was there any use, at least recently, of agentic coding to create some of that or rewrite some of that so that the software became more efficient? Just run me through that as well.
Yeah, sure. It's more like a timeline, So we started off before Gen AI, right? So it was more or less your typical SaaS web-based application, where you have those sidebar menus on the left-hand side, and then all your functions being listed down. Yeah, exactly. You've hit the point, in which we try to convert paper-based workflow and features and function, whether it's preventive maintenance, corrective maintenance. In Thailand, especially, e-commerce is very popular. So we have a few modules that help track parcels and incoming packages. So basically, the entire property management feature and workflow runs perfectly on ServiceMind. For me, that's the pre-AI era. And once we start having AI, that's when the things get really interesting for all of us, because a lot of things conceptually we were able to do. We were able to bridge the gap between the function, the requirements, and the actual development workflow of our coders.
Were there services that you wanted to provide? And again, this dovetails again really nicely with the conversation that Martin and I were having before we started recording today. But were there functions that you wanted to provide or services that you wanted to provide, but the expense of writing the software, whether it was the time expense or the actual monetary expense of actually writing the software for one specific service that seemed a little bit niche, if you know what I mean?
Yeah.
Right. And I want to talk about parcels in a bit because I do think that that's important. It just became so reasonably priced because of agentic coding. You're like, you know what? We had this idea back in 2021 or whenever it was, 2022, but now we can actually do it. Let's roll this. Let's test it. Let's build it, test it, roll it out. Are there things like that? And maybe you can tell
there's
one
so
or two of those
examples.
things.
There's so many examples which I can definitely share with you. So just to open up a bit, right? Some of the features we wanted to do earlier was the complex accounting and billing system, which, we never had a dream of actually doing it on the cloud because we had to rewrite entirely the entire system. So once we used agentic coding, it actually cut down a lot of time, and requirements gathering was actually streamlined. You can say it revitalizes the entire software development cycle.
But when you say accounting and billing, you mean so again, let me give you an example. One of my friends lives in a building called Condo 1.
Okay.
But there are Condo 1s everywhere, right? There's one on whatever, pick your soy.
Yeah.
So when you write this accounting software, is it organizing all of the accounting and the billing for all of those buildings that sit in the same thing for like plus management, just as an example of a company that does management there? So you do it at a high level and it filters down into the buildings?
Right.
You are, yeah?
Sorry, so what we call it as an organization, right? So the organization is the main umbrella, then that breaks it down into companies and building, because truth be told, our main customers are property management companies.
Makes sense.
That's one of the main business model that I think we were able to do well, and we were able to succeed because rather than going directly to each buildings and trying to pitch their product, pitch our product to them, what we did was we flipped it around and we pitched our product as a selling point to the property managers, to the FM, to the facilities manager. Yep. And then in turn, they are the one who uses our product to pitch, for new projects. And that actually helped enlarge our scope, from just residential buildings to major commercial buildings around Thailand, like banks and, corporate complexes as well.
Yep. Yeah. So like if you could have this software embedded into Bangkok 1, that would be a big deal, right? Because
they're actually using it though. One Bangkok is using our software as a backend for the.
How good am I, by the way? Off the top of my head. Okay, I got the name of the project wrong, but pretty close. I
Yes,
don't live over
yeah,
there on
yeah,
Rama 4, but still, I got it pretty
yeah.
close. Yeah.
But again, that is the other side of the business model. So we
Go ahead.
have the prop tech, and we do customization based on specific requirements. Like for one Bangkok, or for be it AIS or maybe Gulf development. So yeah, that's how AI actually helps for us to create new features, new functions just rapidly.
So can we talk? Do you mind if we just back up a little bit again and talk about this relationship between the facilities management companies and the developers as well? Because we haven't spoken about the developers either. But look, you and I, like, we live in the same neighborhoods, we drive on the same roads, and there are new condos going up in my neighborhood like all the time. And whether they're individual buildings, which is unlikely, or part of a group like Sunsiri, whatever it is, what type of relationship do you have with the developers that then work with the facilities management or the property management companies? And what is the symbiosis there around, like, who decides whether the software gets used?
So what happens is that you start to see the trend, right? That once upon a time you have these condo developers, and then just to try to get more cash flow, try to generate more revenue, they have to come up with new businesses, and one of them happens to be property management.
Yeah.
Right? So you see big developers spinning off property management companies. So we do have some. I think it's really useful and helpful for us to have good relationships with the developers. But the first few years, right, it's under warranty. It's been taken care of the property management company, which they have actually appointed.
Sure.
So for us, having a good relationship with the FMs, with the property management companies, plays a vital role, in terms of growing the actual ServiceMind stack.
Yeah. What other services? You mentioned e-commerce before, right? So I also find this very interesting. It's got to be more than just like parcel control, right? I mean, a lot of buildings do have, downstairs, they do have lockers, or they've got a front desk, depending on the quality of your building.
Yeah.
What else are you doing from an e-commerce standpoint? Like, if I knew a guy who was building a platform where, again, trying to do what you were doing, part of the embedded services was providing what I would say relevant e-commerce services to people inside the building. Like, if I need a new bulb in my thing, I don't want to guess what kind of bulb it is. I don't want to have to figure that out. Are you involved in that as well?
Well, the thing is, we can't really make a choice for our clients, as to where they procure their inventories from. But we just try to make sure that we run a full stack enterprise application, so that one day, if that needs to be the case, then we can easily plug in with the APIs. I mean, we've done Lazada integration before, but we found out that price-wise, it's not too competitive for them. It's better for them to deal directly with wholesale suppliers. So many of the things are still done offline,
Still.
Yeah, still.
Interesting. So what changes, like, at scale, from a 35,000 foot standpoint, what changes operationally inside of these buildings, or this conglomeration of buildings, right? When all of the maintenance stuff, now you're recording data, I presume, as well, and all the tenant related services are managed through one platform. What changes for the building? What changes for the lifestyle of the people inside the building? What changes for the property manager? Like, there's a lot of stuff going on here, right?
There's actually a lot of things that has changed. We see that ever since we've introduced new features, which is more agentic based, the adoption of the application has actually grew. So rather than having to navigate through different UIs, going through different screens, what we have done is we've converted that into more of a chat base, because I think it's not about us doing it. It's about them expecting that we have these functionality, because you see it everywhere. You go to a typical Meta, like Facebook support page,
Right.
and rather than opening a ticket, which would be easier for us, it's more of a conversational flow where you are taken through and you're guided through different steps and scenarios. So I think it's what the market expects for us to have now. And once we have that on board, it's just very easy for them to learn and adopt. So we've seen a lot more usage ever since we've introduced these features into the application.
So where does agentic AI fit in there? It's not clear to me.
So basically, we've created an agent inside ServiceMind that, well, I wouldn't say it replaces the admin, but very close to doing that right now. Normally, what you would have, right, is that any work order or any corrective maintenance request would come into the admin. which is a normal like operator, then he or she would have to assess the request and then route it through different teams and assess what are required in terms of like the inventories, what needs to be done with the assets, well, the entire job description of a typical admin.
Right.
But now we replicated that entire knowledge into an agentic workflow. So you really now have an agent that does this critical decision making on behalf of the company and just routes the ticket directly to the engineering and support team. It just makes things much, much easier. And all the customer need to do is just take a photo of the actual incident and just report it through ServiceMind, and that's pretty much it.
And was there any resistance actually initially from the property management companies? They're like, we don't need, you know what I mean, at the beginning? Or did they just think like, we've always wanted someone to build this for us, now we're so happy it's there?
So it's a give or take, right? I mean, we do get requirements directly from them. I think that's the best way to learn from the market. But we as an IT company, we've got to innovate as well. So for us, it's about spotting opportunities. It's about learning from the market. So once we've introduced this sort of a workflow, we know for sure that whether they utilize it or not, it's going to be a good selling point for them, because again, they are our sales channel, right? The clients is actually our sales channel. So once they're in the market pitching these new products on behalf of us, they're going to love all these new features because it shows that they're at the frontier level of AI. And everyone wants to do that.
What is the most used feature? And then what is the most requested feature? Do you know what I mean? In other words, like stuff that you haven't built yet is the second half of the question. But the first half of the question is the one thing where just people are like, okay, I use this every single day, as many times as I need to use it, like whatever it is. What's the most used feature? And then what's the most requested one?
Yeah, so so we break it down into personas, right? The most used features for the tenant would be the parcel management system.
Yeah, makes sense.
The most, it's obviously that, they wanted what they actually have ordered for it. So the most used feature for the persona would be the work orders and the corrective maintenance because they're trying to get their job done too. But your other question was the most requested feature. And every time they ask for this, we've turned it down, is the social marketplace.
What does that
the
mean?
Application. Basically, it's your Facebook marketplace, but built into the application itself. So people living
they want people to be able to like buy and sell like their couches and their stuff.
Yeah, we've always said no to that.
Because why?
Oh, because we don't think that you have to restrict yourself selling these items in your condominium or in your building. We just think that we don't want to do anything to replace existing e-commerce platform or Facebook marketplace. I mean, the entire market is out there. Why restrict it to just that building that you're living in?
Call on me. I have a question. Please call on me. My hand's raised.
Go ahead.
Okay, that's a good point. But let's say, and I'm going to make this up because I don't know like the nature of your entire business, but let's say there are 20 property management companies in Bangkok proper. We haven't spoken about anything outside of Bangkok yet, but I want to do that too. But let's say there are 20 property management companies that manage, let's say 92% of all the residential properties in Bangkok. Let's just say that. I don't know if that's true or not, right?
Yeah.
If you could get 17 of them on the platform, now you have 85% of that market. And it doesn't now, and you can put a layer above that and then say, sure, if I live in a plus management company property, but I want to sell my thing to everybody in Bangkok and disintermediate Facebook, because I can't call them Meta. I'm just like something inside my head just doesn't click there.
Facebook,
To me it is. To you it is too, because you had to go back to Facebook too.
Yeah, I did.
But the point is like, why wouldn't you build that thing, which now is not just restricting you to sales inside of your own building, but now it gives you people that are like your target market, right? Because like if I put something on Carousel or on, help me here. What's the Kaidi? Do I have that right?
Kaidi.
And Facebook Marketplace, it's going out to everybody. Like I know you can target it at some level. Yeah. But if it's on ServiceMind, well, then it's just inside the property management company. So if I have a couch, it's going to be people. The only people that are going to look at it are people in other condos or people in other apartments. Why wouldn't you build that layer just above everything else and connect all of those things together? Maybe I'm wrong here, or maybe that's just a pain in the butt to build.
No, it's right. I mean, it's just the way we've seen ServiceMind. We've always proud that our product is mostly going to be white label. So every time this is one thing that I have to just be clear here. Every time we sell ServiceMind to a client, to a FM or to a property management company, we white label it. So we rebrand it as to whatever they want. So if it's CBRE using ServiceMind, it's going to be called like CBRE Connect. If it's one Babcock using it. So we have a very strict policy that we're not going to be mining, or we're not going to be doing business out of their customers' data, because I see where you're coming from, right? If you have this whole big data concept across the entire system,
which you definitely have,
which we do, but on paper, we're not going to be mining on it. So that is where I think we see ourselves at. We're still looking at ServiceMind being the best white label enterprise property management software out there.
Okay, so you're happy to leave that money on the table.
Well, yeah. Just so that our clients are more happy with the way we operate, because many of them don't like that. I mean, they did request for it, and then once we gave them this sort of an idea that you want to give it out for free, but you want to do ads. So we're always against those things. We don't look at ourselves as a freemium and then you sell ads. I don't think that's a really sustainable business model. I mean, that's coming from our own research and our own point of view.
Interesting. Because I was going to ask you about the ad business next. Again, you've got this sort of very captive audience. Say again?
We don't do that too. So no ads and no marketplace.
But how about for in other words, can the property management companies use your platform to do sales? Is maybe the wrong word, but just if a place needs to be rented, or you know what I mean? Isn't there a place for you to become an agency as well? And you don't want to do that either.
Yeah, we don't mind doing that, but it's that requirement never actually came up so strong to us. I mean, it will probably just take us a week to, right now less than a week to build and, complete the entire testing process.
Sure.
Now. So
that's not hard software to build. Sorry, go ahead.
Yeah, it's not. But I think where we're focused at right now is to make sure that, you've talked about operations in terms of our clients, right? But where we're at right now is I think we want to improve our internal operations and, sticking to AI tools and building it out with AI. We've been able to choose model agnostic software and tools to use. I think right now, what we try to do is we try to maintain the cost perspective as well. We try to make sure that, we mitigate the cost factor, and we try to increase the revenue per coder. That's our new KPI, because you've probably seen a lot of companies right now that it's not a big build team. It's more or less, a small shop, and they're minting it out there.
Yeah. So how do you decide which models you're using, and has that changed in the last 3 or 4 months from, I would call it AI classic, you know what I mean, like Anthropic and OpenAI, to DeepSeek or to any of the other sort of Chinese open weight models?
I mean, personally, I can't speak on behalf of my company, even though, I'm the managing director, but it's all a personal choice. I'm always up for open source, right? So, back in the days, it's Meta a lot, right? Now I'm called them Meta, but yeah, I've always been a big believer of open source platforms and open source model. So for me, especially using Cursor as my preferred IDE of choice, we were always using Chinese model without knowing them. The Composer model was actually built and trained on top of Kimi, right?
Kimi, yeah, sorry, excuse me.
Yeah.
But now that Kimi K3 has come out, now that its costs are so much lower, DeepSeek obviously is pricing their most recent models at it's basically free. I wouldn't say free, but you know what I mean? It's very inexpensive. As the managing director, you don't want to convince the rest of your team to use the cheapest model when the coding benchmarks are telling you, and not you personally, but that the performance is it's a push, right? Yeah. All the models, particularly from a coding perspective, are just so close to each other. Because coding itself is not, it's a very well-defined field.
Yeah.
Yes.
It's exactly, I know what you mean. It's for us, talking or selecting a model is choosing a friend. I can't force them that they
no,
communicate better.
Force them.
Well, for me, I feel the same way. I feel more happy to talk to Claude sometimes in terms of getting things planned, and then when it comes to the actual workhorse, I switch to a Composer 2.5 model or a Chinese open source model. It really depends.
Interesting. I would have guessed that you're just okay, everybody from now on, we're just going to use Kimi K3 because it's so much cheaper, and since I'm in charge, you're just going to do what I say. You figure it out. But I guess you're not going to do that. You want to.
Well, I did enforce them to choose cursor, though. I mean, that's one thing I did for sure, because
you know what I mean. Because like, if you gave a company car to everybody, everyone's going to buy a Ferrari, but you're not going to buy a Ferrari for everybody, right? You just probably going to buy a Toyota Corolla or whatever. Yeah.
So yeah, my tech lead is actually up to me saying that, you know, I got to pay for his bills for the ones that he's used at home. So I said, yeah, okay, we'll do it. He's probably watching this too.
He probably is. I see him right now. He's commenting. He's in the chat. He's like, yeah, well, please do pay my bills.
Yeah.
Okay. Well,
no, but we're doing that. We're planning to switch to a, you know, tool of choice as long as the entire workflow still, you know, operates well. But that's probably going to be a whole lot of a conversation. Best for a later date.
Fair enough. Look, it's always great to talk to somebody in Bangkok who's actually building something real that a whole bunch of companies use. It was great to meet you. We'll have to talk offline as well. Thank you so much for coming and doing this today, Shivek. I really appreciate it.
Thanks. Great to be here.
Yeah. Bye for now. Okay, Martin. Let's do HCL. So HCL Tech is supercharging progress with AI that moves beyond ambition and delivers real business impact. I mean, real business impact. A recognized artificial intelligence leader trusted by global enterprises to turn technology into transformation. HCL Tech is supercharging progress. Martin, it looks like Tobias is ready to come in. Let's bring him in right now. Tobias, how are you? I am super duper. Where are you?
KL, Malaysia, right now.
Got it. Yeah, KL, I know. I was probably in KL before you were born. Look, it's great to have you on, CTO at Axium Industries Group. We want to talk about how autonomous supply chain intelligence can improve the decisions and operational performance of industrial businesses. But before we do that, tell our viewers and our listeners a little bit more about the great work that Axium Industries is doing.
Right. So first off, I'm really honored to be on the podcast today. I think it's great having the opportunity to chat with you about this. For Axium Industries, what we do, we build industrial AI, and our customers are in manufacturing, they're in logistics companies, they're in retail, they're in oil and gas, and the maritime industries, and we're serving customers across the entire ASEAN region, as well as in Japan and Taiwan. And so we go in there, in just a nutshell, we organize, structure all the data that's coming out there, say, from a factory floor, manufacturing floor, all the sensors data, contextualize that, structure that, and then we use this, pairing it up with our agentic AI systems to come up with recommendations, optimizations for industrial customers.
So what kind of recommendation and optimizations are you making? And it's got to be different. It's almost, at some level, it's got to be customized and different for every company, right? Because the data that they're going to provide you is going to be different and also proprietary as well, yeah?
Yeah, so answering the question, I think it's a yes and a no. I think it's different in some ways.
Go ahead.
But it's also similar in many ways as well. So I'm going to talk about some use cases that we do, say, for oil and gas. What we do here in Malaysia, they are producing oil. They're drilling into the seabed, extracting oil from that. And the things that they need to do to get that offshore oil rig platforms running 24/7, they need to have spare parts. So enough spare parts for them, not too little, that they will run out of spare parts. Something critical goes down, they don't have a spare part in there to fix some production system, but not too much as well, because if not, too much capital is tied in inventory. And it's a really complex problem, because now you're looking at 200,000 plus SKU worth of items. There are different projects, different systems being commissioned. It's very, very hard for them to keep track of not just what's in the warehouse, but also in terms of what is actually being consumed by engineering teams out there on the oil rigs. So in inventory, you do a lot of work in there, helping companies optimize the spare part, look at the predictive maintenance schedule, and use a lot of agentic AI for this. And for manufacturing, we're really looking at the industrial engineering side of things. We're looking at how manufacturing lines are configured, how we can balance, the takt time, the cycle times between each station, so the production runs smoothly, and then can we also do some changes to the production schedule, taking in new kinds of orders. And we're using the data provided by each customer, and a lot of data engineering is needed to contextualize that in there for the agents to actually come up with recommendations. And we use this We evaluate this with the customers to get it validated as something that's trustable.
So the oil companies, or at least the biggest oil company in Malaysia, I presume you're operating across the whole region, but you're in Malaysia. So let's talk about Malaysia, if you don't mind.
Sure.
Is a company that everybody knows the name of because it's on shirts across the globe. But it's a big company. It's very complex, and the things that they do are very complicated. What does the AI system need to know or understand about a company? First of all, to get its data organized in a way that's useful to the service that you're providing, but also that it can make a proper supply chain decision. Again, it's like if I have 5 widgets that I'm selling on 4 different e-commerce platforms, I need to know, like, my warehouse supply system needs to understand that, like, when one of those things gets sold, I no longer have 5 of them. I just have 4 of them, even though it's on 4 different systems. But it's the same thing for product supply or for spare parts supply for a company like Petronas, right? That says, I may need this thing, but I may need it over here, and I have it over, like, it's very complicated. It seems simple, right? Like, I just need a screwdriver, so I just buy one. But it's way more complicated than that. What type of data organization has to happen to make this stuff useful? And what do you need to know from that? What do you need to garner from that to be able to effectively do this and make the right decisions for these big companies?
A really, really good question. I think data is something that we focus on quite a lot. And it's actually really picking out a lot of things, signals, right, that you see from the data.
Yeah.
You can look at consumption. You can look at sales, what's being sold, what's being produced. What does it take? What sort of inputs, materials that you need to produce a particular widget? In your example, a widget, what's the BOM in terms of producing that specific widget?
Or just buying it if it's in the supply chain, right?
Yep. And so we start looking at things too, like the purchase order date and the GRN, or the goods receive notice date. So we can see actually the lead times that it takes for different locations, say in Malaysia, a really large country. There is Peninsular Malaysia, East Malaysia. The supply chain can get quite complex. And it's also the presence also of the kinds of suppliers that can actually do this. For specific parts, it gets very critical. It's something that only the OEM manufacturer, for example, can do. So you might want to stock up a little bit more of this. And it's not just that. It's also the systems that you have on hand, which are the ones still operational, which are the ones not being used right now. What kind of parts do you actually need to actually get that all synchronized? And for a large company, say that for Petronas, for example, they have many different departments all doing all these things. It's complicated at times for them to synchronize. Oh, we are doing this, we're decommissioning this thing over here. We're not going to need some of these spare parts. And I'm going to complicate things even further. Item codes. These different item codes, you can actually see inside the inventory that you have maybe 10 different item codes describing the same thing. It could be from acquisitions that have done of companies in the past. So you get in a grandfathered system from another company that has described that in a slightly different manner. You have different engineers in charge using just slightly different item codes as new projects come on, but they're all referring to the same thing. It could be a stainless steel pipe, 5-inch diameter, and you're buying a lot of this because you don't know that it's actually the same thing that you really have in the warehouse, that you can actually use that, cannibalize that in certain ways to use that for existing projects. So it's really a data play here. A lot of different data sources coming in all together. It's also the presence of time, the lead times that it takes to get things across. And then quite quickly you think 200,000 plus items in over there, it gets really, really complex very quickly.
So it's all well and good to go into, and again, just because I've mentioned Petronas, or if I'm mispronouncing it, please correct me. It's all well and good to go in there and like organize their data, structure their data, like do all those things and work with them and create like an automated system for them where AI is employed and does analysis to do all this stuff to then help them do some sort of supply chain management. And I'm simplifying the entire conversation just to focus on one thing. I know it's more complex than that, and that's all well and good, right? That's hard work in and of itself. But at what level are their suppliers ready to be connected to them digitally, kind of across the board, right? Because in some cases, I presume they're ordering, and this is true for all companies, they're ordering stuff from other big enterprises. But in some cases, maybe there's sort of a niche thing that they need that only an SME or an SMB is providing to them. And maybe that guy's in Japan, or maybe he's in Vietnam. How ready are they to accept stuff based on the operating system that now you deploy inside of these big companies to then communicate with these other suppliers?
Okay, another excellent question over there. And I think one of the things in there, when it comes to a new technological change, one thing that we really have to focus on is adoption, the barriers, the obstacles to adoption across the entire ecosystem. Because you're absolutely correct, right? It's not just one company. It's like a system of them,
it's an ecosystem
of
really.
suppliers. Yeah, it is. And the thing that we try to do in over here is also not to make too big of a change, right, in the entire ecosystem. So if they have been ordering through SME, through email, that continues. But of course, it's drafted in by an agent, a human that's in the company still has to verify the data going out. And that's something that we emphasize. I think the technology is not ready for full autonomous execution. You still need humans to come in, check whether things are done. But we can save a lot of time and give them data and intelligence that wasn't quite possible before. So give an example, like supply chain. We talked about inventory. We talked about how these things can be optimized. But there's a very important thing here, buying. The buying process, procurement. For example, if you do a tender, say a large oil and gas company, they throw a tender with all of the requirements in there. It's something that takes a lot of time for the engineers to do it. And it's not that the main job. The main job is out there on the offshore oil rig, keeping productions on. But now they have to draft a 70-page tender requirements. In many cases, it may be repetitive. That's where there's an opportunity for agentic AI to assist them. Not just that too, it's also looking at the bids that comes back. You send out a tender, 5 different companies comes back with a bid. They're going to be submitting to you hundreds of pages of documents. Now, you have humans to have to go through all of this to identify what requirements have been met, what hasn't been met, what sort of clarifications it is that you can send it out to them. And our systems are already doing this for companies that we're working with, where they look at the requirements, it goes through and shows the human, here's the evidence of where things are met, where there's still some gaps, and it drafts out that clarification letter. In many cases, the engineer takes a look, looks good, and then it sends it out. What took maybe a few weeks to do so, now get compresses in a couple of days.
Yeah, which means that the procurement process, even for a big, like I'm just going to make it up, but like for a new oil rig, could actually be way faster than it used to be, right? Because now you can do it in a way that's automated. And that's actually kind of paradigm changing. Sorry, go ahead.
And another thing that we're doing is also even further upstream, the exploration of new oil fields. Now, one thing that the Straits of Hormuz, this entire thing, geopolitical.
Is there something going on in the Straits of Hormuz and I don't know about it?
Then you haven't been reading the news and watching the news here.
Sorry, go ahead. I'm only kidding. Go ahead.
Yeah, but it's those kind of things when it comes down to what's the economical price that oil has to be for certain fields to actually come up. Calculating the reserves, what do you estimate that to be, the whole economics of all of this. Now, a lot of things that we're talking about has a direct impact in terms of the cost structures for many of these oil and gas companies. If you can reduce inventory, you free up a lot of capital to do other things. This can include exploration and production from new oil fields. And there's also work that we're doing with some of the oil and gas companies here in Malaysia, quantifying and helping them estimate. Should you bid for this specific oil field over here? Does that make sense? Can we forecast what the price of oil would be in a couple of weeks from now? Does it make sense 6 months out? Can you create that sort of investment justification for this? And it goes into a lot of the decision-making processes for companies like that. So it's all interconnected because we're really looking at a beating heart of what these companies are doing, how that impacts the bottom line, and how do we improve this through our technology.
How often do you find that, let's go back to your email example, right? So you said it's an ecosystem. We both agreed that that's the case. And that for a larger company, you install, I'm presuming, Supply OS inside of their company. It gives them a lot of connectivity that they could potentially have. But if they have been communicating via email with an existing company or an existing supplier, you just keep that channel open. But does it also give you an opportunity to go to that potential supplier and go, you know what, email is effective, but it's not the most efficient way to do this. And if we work with you, not only with this particular client, but with all of your clients, you can become way more efficient. How often does that happen where then working with client A for supplier, A sub 1 connects you to a new potential client?
It does. The one thing I would say is that we have our ICP down to a T. We typically work with listed companies. So they have sufficient volumes. They have sufficient budgets. The problems are big enough where 10% is going to mean a lot in absolute terms.
Yeah, for sure.
So we focus a lot on the larger companies, and also for a simple reason is that these companies tend to be the centerpieces of the ecosystem. So you get a really good view, and you're absolutely right. The data is incredibly useful, and we can start doing this for our customers that we serve. Right, we can tell them for the suppliers that you have on hand, here's actually what their on-time performance is. And there's one thing that often comes up: a company that's very, very large. They have people buying from different departments. They're not always aware of what the enterprise agreements are in place. So if you do a bulk purchase, you have to do some consolidation across the different departments to get a bigger sort of bulk discount price. But because every department is sending out purchase requests by themselves, they're not doing that aggregation. So this is another thing that we do for the larger companies, consolidating this, aggregating this together, helping them with the negotiations with the suppliers, and then, hey, we are not just buying 10 parcels of 1,000, buying 10,000 at one go. Can we get a better price for this?
Which leads to the next question is, now that you have all this data and all this information in a way that's organized and I don't want to use the word structure, but it's at least sitting in a place that's effective for you or useful for you to be able to analyze this. What kind of data analysis do you do using artificial intelligence as well to make some of the decisions internally that these companies are making, if that makes sense? Because now you have access to all this data. Instead of, as you said, you're not just ordering stuff. That's relatively easy. But now you can do data analysis on all this too in a way that was completely impossible 6 months ago because you couldn't do agentic AI. You couldn't push agentic AI onto it to do that analysis.
Yeah, it was a very interesting one. And we don't just rely on our human engineers to analyze this. So what we have at the beating heart of SupplyOS is a couple of agents. So one of them, which is really useful, is like a data scientist sort of agent, where it's building models, is looking at Bayesian probabilities, is looking at posterior probabilities, observing what the real world is, and then updating his beliefs as it goes along. Because the thing in here is that we as humans, we can't quite postulate or enumerate through all the different possibilities that can come up. And one of our customers, the electronics retailer, it was really, really, really incredible. We deployed a system for them. They're using it in all their stores in Singapore, doing inventory replenishment, allocation of stock. And they started to use the AI to do bundling recommendations because the AI knows a lot about what is being sold together. They say, hey, can you just tell us what goes well together? What shall salespeople be pushing out? What sort of discounts should we do that still makes economical sense for us? This is not something that we engineered it to do. It learned over time because it has experience, it has memory, knows what's working, what isn't, and it takes that and then it goes off and to do all these incredible things. And when we do things like that, it makes it far more adaptable and also quite bespoke, specific to the customer's environment, learning more and more from experience, and you get great results from doing so. And it's not something that's rules that you have to put in there or specific analysis that we can do. Yeah. It's something that the AI learn over time, and it will get good results.
How do you decide which model to apply to which functionality that you're using?
Oh, I think that now comes into like on the cost side, the token economics of things. And one of the things that we quickly realize is that you don't need like the largest models all the time. That sort of intelligence, the sort of things that a top tier frontier model can do. It's something that is useful in many ways, but it's not strictly required. For my evaluations, actually smaller parameter models do well enough. And the core thing, the critical thing to focus on is how do you break the problem into bite-sized chunks so teams of agents can work together, aggregate the answers, and then come out with what the final answer should look like. And on the token economic side of things, the cost that comes down rapidly as well.
Right, but does that mean that you're looking at some of the open weight models where even if you aren't making your own sort of minute adjustments to the model themselves, because to do that you would need, at least today, you need some pretty effective and pretty powerful hardware, but just the cost of using them, whether it's Z.AI or Moonshot stuff, right, or Minimax or any of these other ones, Quen as an example, have you just made this decision that like we don't need to use Anthropic's Opus models or Fable models, and we don't need to use ChatGPT 5.6 because they're just too expensive, and we don't need a model that has 3 trillion parameters to actually get done what we want to get done?
Yeah, is that so? We don't need such a large model, but also because in our use cases in the industrial space, we need a lot of fine tuning for the context specific to those kind of domains. So we take a lot of these open weight models and we do fine tuning to help you understand the domain knowledge that's required for it to be effective in such spaces. And something that the off-the-shelf, your frontier models from OpenAI, from Anthropic, they don't do so well because the presence of the training data for some of these things is not something that is.
But also, you can't fine tune them on your own because they don't give you the weights, right? So
they don't.
So, but you're fine tuning the models if you're using some of the open weight models. You're actually fine tuning them yourself. But what kind of hardware are you running them on?
We do have cloud-based GPUs to do some of this, and I think the cost of fine-tuning has come down quite a lot. But you don't need to do the entire parameters. You can just use techniques like QLoRa, RLHF, and it becomes very cost-effective to do it.
Yeah, it's interesting. So I love having these conversations about the models, right? Because I think we're at a turning point in the way the models are going to get used. I have my own theories on what's going to happen to Anthropic and to OpenAI, particularly from an open weight perspective. But the fact that you, as a big company and a provider of services to other large institutions, have made this decision to use an open weight models, at least in some cases, and then to fine tune them just for your industry, corroborates some of the thoughts that I've been having around how these models are going to work. Really interesting stuff.
And the thing here is that it's just getting smaller. It's getting smaller. It's getting more efficient. There is like new repositories that I've just seen a couple of days ago where you can run that on the browser. It's not a very large model, but just good enough that the client on the client side, the browser, the client machine is the one that's actually doing the inference, and it's just all coming down in terms of the amount of computational resources required for inference to take place. And I think that's also something that sometimes people in the industry conflate all these things together, from like training, fine tuning, and inference, and it can be very different sort of resources doing so.
Yeah, and look, I mean, I just wonder, and again, I'll let you go in a second, but I just wonder when some of the big frontier lab models in the United States are going to have to go open weight and have to massively lower the cost. I worry about their cost base, right? Because the models that you're using are just so much more economically efficient and just as good from a performance perspective, right? This is one of those cases where like 85% is good enough, at least in most cases, and particularly where you're doing fine tuning on an industry by industry basis, it's even more effective because you have the weights. So it's just going to be interesting to see what happens there. Yeah.
Maybe I'll just have one comment on this, is that I think a lot of the times when we talk to these companies in this space, right, the technology is not the core focus, right? They're not just here, hey, can you help me use the largest frontier model?
Nobody cares.
Nobody really cares, right? They want business problems to be solved. So the closer you are to the problem, the closer to where the money is. That's where companies will sit up, listen to you, and then you figure out the cost-effective way of doing all this. And I would just say this, that the models today are plenty smart enough, very intelligent. Can you feed it the right context? Does it have the right data to operate on? If it does, then you get great results. And I think there's a lot less focus on the data engineering behind things. And that's where we at Axium Industries, we do things differently. We focus a lot on contextualizing the data, compacting it, structuring it effectively for the agents to understand. And you get great results, even for models which may not be frontier in terms of intelligence. And you get super good results that can solve the business problems our customers are working with us for.
Those are super great insights, Tobias. I really appreciate your time. I feel like we could talk about this forever, but I'm going to let you go now. Thank you really for taking the time out of your busy day to come and talk to us.
Thank you so much. Yeah, it was a pleasure to be on the podcast.
It was my complete pleasure. Thanks again.
See you. Take care.
Bye for now. Okay, Martin, let's bring Jonas in. Hey, man. How are you? It's
Thanks
great
for having me.
No, it's our complete pleasure. Look, we wanted to have you on because we wanted to talk about how behavioral AI can help trading platforms improve client performance and build more sustainable customer relationships. Before we do that, let's dig a little bit deeper. Maybe you can tell us about the great work that Hoc-trade. Do I have that right, or is it Hoc-trade?
Hoc-trade,
Hoc-trade is doing. Talk to me a little bit about Hoc-trade, and then we'll dig a little bit deeper. Yeah.
Yeah, sure. Let me do that. Yeah, it's a startup company, right? We have been around now roughly 3 years, a team of 10. And yeah, we work closely with Forex brokerages, crypto exchanges on the behavioral AI side and make essentially trading psychology digestible for a trader, right? Because we understand so much about behavioral finance, psychology, in theory, Nobel Prizes have been given out, prospect theory, for example. However, at the same time, we see all the normal retail traders struggling with all the psychology. So we made it our mission to actually make this tangible, quantifiable, and show the trader exactly what are those toxic patterns that are completely normal, that we all tap into, but how do they affect your trading performance?
So how do you expose the behavioral psychology sort of signals to retail traders? And like, just answer that for me first. Like, how do you expose it to them? How do you explain it to them? And how do you tell them what the significance of it is?
Yeah. So we went an approach and we called it like the trade medic, right? Imagine your medical report you get from your doctor with all your blood values. This is in the range. This is a little bit out of range. What can you do to improve that value? And we chose a very similar approach where we go through the trading data, the algorithms go through it, right? And find the specific patterns and quantify their effect. Then essentially whatever comes up as having the highest effect on your specific performance, maybe revenge trading, doubling down, FOMO, whatever it is, that comes up first in the list. Hey, this is cost you that much in dollar terms, work on this first. And at the same time, the strengths, because you want to keep it a motivating document, right? And actually focusing more on strengths is easier oftentimes than getting rid of your issues.
So once you expose it to them, how do they use it?
So it is a report
sorry, the reason why I'm asking is because it has to be put into context, right? In other words, as an ex-trader, you're literally getting hundreds of signals all day, hundreds. And that can just be for one particular asset, not even just an asset class, for one particular asset. For the asset class, you can be getting thousands of some notifications, right? How do you then build the psychological part of it into it? Or are you just like ignoring a lot of the other signals that you're getting and just saying the psychology is the most important part? Like, do you know what I mean? Where does it fit in?
Yeah. So we do take all the market data and so on of what this trader is trading live as well into the analysis as well.
Mm-hmm.
But in the end, it's a document. We do not want to interfere more with the live trading of the trader.
Right.
Think of it more as like your trading journal that you have, that you review once a day, 15 minutes, something like this. So it comes in this form, and it points you into the direction of where you have been leaking your profits, and what you're doing well, right? But it is not supposed to make your trading even more complex, which is already complex enough, right?
Yeah, that's what I was thinking. Like, I just remember sitting on a trading desk and just thinking, like, there's a fire hose of information coming at me. The last thing I need is more info, more data that I have to analyze. Okay, so you send this to somebody as like a document they read before whatever their market is opens, I'm presuming, or before they start trading. And then they can say the psychology is telling me about this particular security or about this particular asset, that X is true, whatever that is. And then they use that when they're trading, or no? Sorry, go ahead.
So it goes more on you yourself as the trader, right? So it doesn't look at the assets that much. It considers the assets you're trading to understand your behavior, but it tells you yourself, hey, in situations when I enter a trade within 10 minutes after I had a loss, I severely underperform and react rather on gut feeling than sticking to my original plan. I'm sizing up and so on. Yeah.
So it's analyzing me as a trader. It's not analyzing the market and telling me how the market is behaving from a behavioral trading standpoint. It's saying, Michael, this is the way you normally behave when you do this. And you need to know that if you do that again, it's going to give you the same results. And maybe you need to adjust your behavior.
Exactly. There are enough tools analyzing the market, right?
Way more than enough tools.
Yeah. No.
There are enough tools plus one. So how does this behavioral AI information that I get about me, which God knows I'd like that in other parts of my life, how does it? Don't laugh at me. How does that reshape risk management for a trader? Do you know what I mean? And then how sustainable is that? Like, how can you measure? Do you know what I mean? Like, you can literally go to a psychologist and have them tell you, like, you're freaking out because of this thing, that thing, and the other thing. And then you leave and just go back and like live your regular life. From a trading perspective, how do you measure whether the information that you're providing is actually effective? And how does the trader themselves know as well? Like, I need to pay closer attention to this, or I forgot about this psychological aspect. Like, how do you measure all that? Mm.
will be surprised by how repetitive the patterns are. Actually,
No, I would not be surprised at all. But go ahead. Zero surprise. But go ahead.
Yeah, but so it is really about finding essentially statistically significant patterns within the data, right? So as I said, for example, earlier,
Before you go ahead, does that mean that I'm actually providing you data on my trading?
yes, it plugs in as a completely anonymized way that can see all your trading action
So it
happening.
knows what time I've traded. Does it know what I'm looking? Do you know what I mean? Because I can be looking at the FX markets all day when I should have been looking at the interest rate markets, because that's where all the activity. Like, how do you know what I'm actually paying attention to? What kind of data are you gathering from each individual trader so you can help them understand their own behavioral patterns?
So everything that you essentially see in your trading software, we plug in, for example, in MetaTrader 4, MetaTrader 5, right?
Yeah. Okay.
So anything you have traded, the symbols, the timestamps, the position sizes, the profits, losses, and so on. And then all of the markets you have traded, we pull at the same time all the quotes, all the news that are coming in. So we understand, are you actually reacting to a typical news here? But the most important part is actually all your history, because there we can see what typical patterns do you have in the past and how do you now change this behavior, right? So that is actually way more crucial than, we're not plugging in your heart rate or something like this, for example, right? So to see, are you getting more excited or different emotions at that point. But actually the raw trading data that we're having gives us so much more already to understand. Do you break a pattern right now? Are you now trading a breakout trade or a trend following and so on? All of this is actually in the data just by combining the sources of your trading data.
And again, how do you know if it's effective? How do you know if someone's following it, or do you even care?
We do care, and if we would just simulate, or we are simulating, what if the AI flags, hey, this is a trade which falls into one of your loss-making patterns. What if we would screen all of those trades out, right? What if we would have not done these trades? Will you now perform better or worse compared to your actual performance?
Yeah, but that's 2020 hindsight, right? I mean, that's relatively easy to do. I can go back through my trading history and just be like, if I didn't price that portfolio at this thing, I would have made 10 million bucks. But I did price it that way, and I got carried out on a stretcher. But I'm talking about, like,
we do live, and we measure this on your future performance,
right?
right? So not measured on the past.
On the past, sorry.
We have the snapshot, we know your patterns, and then it live tracks in the future. Hey, this trade would have been screened out. This trade, you would have better halved your position size. And then we have a result which we really can compare apples to apples, not knowing what happened anyways afterwards, right?
Right. I'm just curious, like, how, traders are weird people. They're just they just are. And I know that because most of my friends for 20 years were guys and gals that were trading stuff. And we were all kind of weird. But the point is that, like, and to be fair, they don't like to be told what to do either. I'm just curious, like, how they react to this, their own behavioral patterns, and how willing are they, or how effective is it for someone to go like, this is what you did last time, don't do it again, kind of thing. And if they're willing to back off and be like, I'm going to let the software tell me that I'm going to let this thing run, because if I don't make the same trade that I would have normally made, I'm going to make more money.
Yeah. So actually the reaction, if you talk to more experienced traders, right? So,
Yep.
And we are dealing with the retail space here. There's also a lot of not so experienced traders that essentially really just dabble a little bit on their phone and trade, right?
Yeah, those guys should have their phones taken away, because they're going to lose money for sure. But anyway, go ahead.
But if the reaction we get from more experienced traders is not like, hey, I didn't know I was revenge trading, or I didn't know that I'm manually cutting my profits too early, right? They do know this, obviously,
right?
But they have never been shown an exact dollar figure how much this impacted their overall performance. And that makes things suddenly real, right? If you see it by trade, for each trade, it tells you, hey, was this revenge trading or not? And what was the impact, right? that makes it more real for the traders. The experienced one, they need to be tracing back. They love data, right? They love going through the individual steps. But once they see it on every trade broken down, that starts a process of like actual reviewing it and doing slight adjustments going forward, right?
And do you think that traders actually end up making more money when they start using your service? And what's the retention rate? Like if it's really good at doing this, and like you said, if it's attaching a dollar figure to, like, if you know in the past you've done this and it cost you X amount of dollars, what's the retention rate for good traders? Because a bad trader is a bad trader. An inexperienced trader is going to lose money more than they make money unless they're lucky, whatever that means anymore.
So the retention. We measure the retention rate because most of our clients are actually the brokerages and the exchanges, right? And they give it as a VIP tool oftentimes to their traders. And we do see that the traders stay significantly longer, roughly 40 to 45 days. Actually, a trader lifetime is not that usually that long, right? So this number of days is actually percentage-wise a rather big step. And also on the trading volume, for example, 32% on average now over everyone that has used the tool, the trading volume goes up 32%, right? And the average performance of the trader goes up as well. It is not yet break even. Like the uncomfortable truth in retail trading is the majority is losing money, right? More than 80%.
I would say that more than a majority, but yeah, most people are losing money. That's why hedge funds actually work.
More than 80% lose money, right? And the trader does on a relative basis get a good step better. However, they don't reach break even yet. There are some, for them it was enough because they were slightly loss making to go into break even or profitable. But overall average taken, the trader does not get profitable yet. We may not be good enough yet on the tool. There's certainly lots of things to improve, but we're working hard to get there.
Yeah, I don't think it's your fault. I think most people are just terrible at trading. So most of your clients are actually big institutions, not individuals, and then they give the tool to their traders. That's actually even more interesting to me. So the big institutions are actually doing this, or big brokers are actually buying the product so that they can understand better how they're trading and help them be better.
Yeah, but don't think of hedge funds. Think of brokers like XNAS, like eToro, like so that give it mostly to retail traders, right? There are a couple of top firms that use it as well for like those funded challenges. Yes, in this area, or BitMEX as a crypto exchange, which is unfortunately shutting down, but they, for example, had it as well.
Sorry about BitMEX shutting down. But should not be surprising to anybody who's been following BitMEX. But you're saying that this actually works for people, that they actually do change their trading behavior over time. And it's funny that you said that most of them don't trade more than 45 days. Is that actually a real statistic?
The 45 days was how much longer the trader traded using the tool. The average is roughly at 100 days or so, right?
For what? For tool usage?
Of like having an active trading account and from your first action until your last action on that.
Really, 100 days?
Yes.
That's it?
That's it.
What does that mean? Does that mean that most people that are you said 80% already are losing money, but that means that like they're losing money pretty quickly.
Usually very quickly. It differs by trading style, right? For scalpers, I think the average is like 41 trades a day.
God.
Over trading is one of the most common patterns we find in the data, obviously, for a swing trader.
For sure.
Longer, right? Yeah.
Yeah, I mean, I guess nobody told them about transaction costs.
That's on top. Yes.
That's on top. Yeah. I was just doing some math. I traded from 1998 until 2011, so a little bit more than 100 days.
A little bit more, yeah.
Do I get a prize for that? Do I get like free usage of the software? Come on, hook me up.
I think you qualify as a VVIP over
as a VVIP for the software. What kind, like, now that the software's out, like, what kind of new stuff are you developing? Do you know what I mean? To get it ready, or are there constantly new ways to analyze the behavioral psychology around the trading, or is it a fixed tool? It just is what it is, and now you're just out there trying to sell to people.
Yeah. No, we have now reached a stage of, so we have roughly analyzed 500,000 traders by now. So have can teach the algorithms on those 500,000 traders, and so it is a very solid base right now.
Yeah, that's
now
a lot of
come the
people.
points of, for example, going deeper also into the technical analysis, seeing what is happening in the market, and then adding more live features, as you were saying in the beginning, right? I don't want to have more notifications.
Yeah.
However, will have some notifications of, okay, you just reached your typical limit of daily trades. From now on, your performance dropped, right? In the past, in your pattern. Or you just had a loss, your typical recovery window to start behaving rationally again after a loss is now the next 12 minutes. Either only set a limit order or just try not to trade during that time, right? So it becomes more like a little helper on the side that feeds information in. This is something we are developing right now, for example.
I like this a lot. Where are you based?
Taipei. The tech team is in Taipei. I'm also in Taipei. Yeah.
Fair enough. Okay. Well, good luck with this. It's really interesting stuff that you're working on. Thank you so much for your time today. I really appreciate it. Super interesting conversation. Obviously fits into a whole bunch of stuff that I'd love to talk about. So thanks again for your time, man.
Thanks for having me. If you really want to try it, just shoot me a message.
I will. I don't trade that much anymore, but still, fair enough. Thanks, man. Okay.
Thanks. See you. Bye-bye.
Bye for now. Okay, Martin, let's bring in Ilman. How are you? Yeah, I am super duper. Let's bring you into the main room. Give me a second. There you are.
Yeah.
Okay, man, it's great to have you on the show. Before we jump into the main part of this, how distributed AI infrastructure can lower the cost and increase the sovereignty of AI-powered businesses, why don't you tell us a little bit about, do I have this right, Dizzaract?
Yes, sure. Dizzaract is AI and gaming infrastructure technology group. So we are focused on building AI infrastructure and infrastructure for the gaming industry, including AI as well. Because, every industry is switching to AI right now. So gaming is not, it's not outside of it, but in the early stage. So we focused on this as well.
And are you a gamer yourself? Is that why you focused on the gaming thing, or did you just see the biggest opportunity there or the fewest competitors?
Yes, I am long-time gamer myself. I did my IT career, but it started from gaming. I think as many IT guys.
It's okay. I'm not your dad. Like, you're not going to get in trouble for being a gamer. I'm not going to get mad at me. Go ahead.
So when I came to gaming, the first thing, as an AI engineer, my background is I'm an AI engineer. I did my master in AI and robotics 10 years ago in China.
In China. Did you do that all in Mandarin, or did you do it in English?
On Mandarin, yeah.
So you're a fluent Mandarin speaker.
Yeah, I am.
That's impressive, considering that's not your native language. Sorry, go ahead. I interrupted you.
So, first time what I did when I decided to come to gaming is I checked what is from AI perspective here, and especially gaming is super rich with data. And 4 years ago, no one was considering or doing anything with data from gaming. So we focused at Dizzaract to build up first R&D center, which will explore those opportunities to collect data, to process them. You use this data for different industries, for healthcare, for, like gaming, it's super rich with behavioral data. And now when in this transition of AI to the physical AI, in this year, next year, it's become even more crucial and important to work with this data and use it for AI.
So what kind of data are you gathering in the gaming space, and what do you use it for, and to whom are you providing it?
See, I think if you take the whole digital industry, gaming is the most rich by data, because you have players interacting with environments.
Yep.
You know, not only like what they are talking about, you know, how they make decisions, why they make these decisions. And based on this, you can know a lot of biological data, how brain work, how, you know, like some players are playing as pro players, some are amateur. What's the difference? And
And
you're playing different games, you get very different strategies. Like you're playing chess, you have one brain activity. You play competitive shooters, you have different brain activity. So we can analyze it all, know the cross game behavior, and use this. That, for example, it can be used for Alzheimer disease treatment, early detection of it, or any Parkinson, you know, like related to the brain diseases. Or imagine today humanoid robot, like companies who is building humanoid robots,
yep.
they have big problem with data, right? Because they need to train those robots with live data. So they need to sell them, let them be utilized in different industries, then getting data, making them study more, train them more based on this data. But if you use gaming data, you can have you can make this humanoid robot walk through games like million miles, you know, having like million different scenarios, but like almost, because gaming is most closest to our simulated world, right?
Yeah, in a lot of
yeah,
cases, yeah. So
this kind of opportunities.
what is your view on the amount of money that's being invested in the infrastructure for artificial intelligence? And
Yes,
yeah, sorry, go ahead. Tell me what that is first, and then maybe I can follow up with you. Do you know what I mean? Because literally hundreds of billions of dollars, I could actually say trillions of dollars, are being invested in the infrastructure here, whether it's in the model development, in sending FDEs to people, in building out data centers. Do you know what I mean? Putting stuff in space. Like there's a whole bunch of crazy investment going on. What's your view on all of this?
It's a very good question, Michael. Yeah, you are absolutely right. $7 trillion it's planned to be invested in coming like 5-10 years into
Yeah.
data centers alone. And when we say data centers, it's not only you need to build up data center, you need to build up the whole power grids around, infrastructure around it. So my opinion on it, might be a bit different from the main trend, I would say.
Go ahead.
I believe $7 trillion on data centers investment, it will be big pressure for world economy, especially this time. I am more about, and you know, there is a lot of compute already exist in the world. If we take SME data centers, which is currently being built by, you know, enterprises companies or some, you know, telecom companies, we are talking about 100,000 of them exist right now in the world. 100,000 SME data centers, which is around 100 gigawatt of compute power.
Yeah.
Which is right now occupied only for 12 to 18%.
But is it the right kind of, so
No,
that's an interesting concept. So you're talking about 88% of the 100 gigawatts of compute power. I want to make sure I have this right. 100 gigawatts, you said, of compute power is latent, meaning it's not being used. Only 12% of it's being used. 88% of it's not being used.
Yeah.
I can't confirm or deny that because I don't have those statistics in front of me. But taking that as a fact, is it the right type of compute to be able to handle the type of compute heavy calculations that need to be done to get proper either A, training for artificial intelligence modeling, or B, the inference results that come out of the training? Or is it different?
For training, more no than yes.
Go ahead.
For inference, is absolutely yes, because most of these data centers have older GPUs, like few years older GPUs. And you know, when like 4 or 5 years ago, when AI was just about to be boomed like
Mhm.
it's now, 80% of compute power was occupied for training the models because models was not developed like today.
Yeah.
And you need to train them, you need to develop them. For that, you need the most modern chips, the heavy chips to train them, right?
Yep.
But if you check today, by 2026, uh, only 40% of compute power is used to train models, and 60% is inference. And my prediction by 2030, it will be closer to 80-90% of being for inference, and 10-20% it will be only for training, because models are very, very well developed. And it's not longer about who has more trillions of parameters. It's more about how effective those models
Mm.
and the quality of answers they give, right?
Yeah.
So, and that existing infrastructure, it can be and should be utilized for AI inference, which my company is focused on, because it doesn't require the most modern chips there. But to do it, you need to do it in distributed way. When you have one protocol, one platform where any of these entities can join, and for the clients, for might be enterprises or some developers, you remove the headache with engineering parts. So they just switch the API and you can use it. And if someone is using closed models, they can switch it to open models. If they're using open models, they can optimize, have more optimization on the costs, because we are targeting unutilized compute power for AI right now, right? To be utilized for AI.
So what is the market missing in the case of companies like, let's say, Anthropic, who's committed to like $10 billion to pay Google or to pay SpaceX for, reserving compute power for the next like X number of years? Is it the case that these data centers that you're seeing that are already out there, you said, 100,000 of them for SME data centers, that they're just not in a state that's consolidated or connected enough to be able to use for this stuff, and that somebody needs to sit on top of it? I presume this is where you're talking about Dizzaract doing, is sitting on top of them and saying, we can use distributed computing power to accomplish the same thing. Like, what is the market missing here? Why is Anthropic spending so much money, and frankly, OpenAI? And why is SpaceX building Colossus 1, Colossus 2, and all these other data centers out there that are specifically for, you know what I mean? And a guy like Philip Johnson, who's running something called StarCloud, is saying, we need more data centers in space because there aren't enough of them on the ground. Like, what are those guys seeing that you're not seeing, or vice versa?
See, it's just different business model. Anthropic is a AI models company, so their business is to develop and deliver to market AI models, right? LLM models. And sorry, the models they have is closed models, right?
Yep.
If you
Yep.
divide market right now, like in AI industry, there is $55 billion revenue monthly based for in AI models, I mean, and 46 billion of them is closed models. 9 billion is open models. This 9 billion, just a few months ago, it was like 2 billion, right? So it's scaling like, and if you notice the market in last 3 months, it started big trend to switching to open models, right? Because the price comparison is, we can, like, if you compare with closed models or open AI models running on your infrastructure, it's
It's
like
not even
10
close. I mean, in some cases, 10 times
Ye-
cheaper, or sometimes 100 times cheaper, right? I mean, the newest model
Yes.
that came out a couple of days ago is like 100 times cheaper, yeah?
Yes, absolutely right.
Yeah.
So for Anthropic, their inference mostly run on their own data centers or with close partners that they have. They don't give access to, they don't give weights to market,
They don't give
right?
weights to
So
anybody. Yeah.
yeah, they cannot for time being. So then they will lose then their competitive advantage, right? So this is their business models, which they are stick to, same like OpenAI or Google or XAI, right? Who run closed models. For them, yeah, they don't have choice. They need to have their own data centers.
Right.
But if we talk about um, AI companies who is selling AI as a service, right? Let's take some vibe coding, let's say like a Cursor, or who has already big user base. The token economy is the main part of their business, right? The unit economics of their token economy. For them, it's crucial to have alternative with open source models and infrastructure which is optimized to run it more effectively, right?
Right.
This is their direct P&L. And it's not a secret, the whole world is switching to AI, or every enterprise is switching to AI. And for them as well, it's crucial to have optimized AI inference. So we are targeting that market of enterprises, of like AI native companies who already have a successful service running with big user base. And yeah, that's where we focus on.
So how can they be sure of the what's the right way to say this? Big enterprises, and to be fair, small enterprises as well, don't like uncertainty. Right? They don't like knowing that like this is a maybe kind of thing. But if they have to have access to compute power that's latent, right? That's sitting on these 100,000 data centers that you're already talking about, and they can do the proper inference there because they can use DeepSeek, or they can use ZPU.ai or Z.ai, right? Or even my guess, and again, tell me where you think I'm wrong, but my guess is Grok is just going to go open weight, because I think that that's something that Elon Musk is going to do at SpaceX just to screw with everybody else in, at Anthropic and OpenAI. And plus they can afford it because they just raised a bunch of money. But how consistent will because if you're running on your own data center, you have access to that data center and it's just your compute, you can be pretty confident, right? Not 100% confident. You can be pretty confident that the compute is going to be consistent over time. How consistent can this sort of distributed compute be? And is it good enough for big institutions to be able to use to run the inference type of stuff that they want to, both from a speed perspective, but also from an availability perspective?
It's very, very good question.
Thank you.
Which we are focused on to solve, right?
Yeah, that
And
should be the thing
absolutely
you're solving.
right.
That's why I'm asking. Yeah.
When you're going distributed, you have those clusters who is data centers, or I mentioned to you only SME data centers, but almost equal or more compute power you can find with consumer devices as well, like laptops, PCs, and so on. Then only PCs, there's 3 billion PCs in the world. Among them, 500 million is high-end gaming PCs, which all of them also can be utilized for AI inference. But the question you ask, it comes out how you will manage it, how you manage uptime, how you manage internet speed, latency, availability, and
All
so
that
on.
stuff, yeah.
And today there is not much companies who is solving those problems. So we
Right.
are one of the early and first. And here I can give you some references. For example, if you studied how blockchain of Bitcoin work, right? You have a lot
Yep.
of nodes inside. It's very secure, like it's run by the software, right?
It's also really
And
slow historically, right?
yeah, it's dinosaur in the blockchains right now, but still it's cannot be hacked, right, or broken. It's super secure, and it's P2P network. So what we are focused is also similar concept. When we have a lot of clusters, each of them will have their own reliability score. Like if we do kind of Tinder for AI compute and enterprise, right, or clients who need the tokens. So depend on your we building our own security runtime. We build verifiable inference, right? Like validation of inference. Because now, if you will send even in the open market, open models market, if you send inference request and you choose a certain model and get it processed, there is no one guarantee you that your request being processed in that model and in that data center. You just don't know. So we are building that solution where it will be like in blockchain, right? It will be open open code where it's all can be verified and validated.
So if you do this, right, if this is actually successful,
Not if,
where
when.
I love the attitude. When this is successful, you're just bullying me into saying when. When this is successful, I don't like bullies. But when this is successful, where does the leverage move then, right? Because right now, all the leverage today, and I don't think it's going to stay here forever. If you listen to me, whether on ATP Insights or on AGTP Insights as well, our global show, I feel like the model companies, the frontier lab companies like Anthropic and OpenAI are going to lose a lot of their own leverage and power in the next 6 to 12 months. Let's say 9 to 12 months. Because I agree with you. I think that the open weight models are going to become more prevalent. People are going to use them more. The costs are just the cost comparison is just way too much in their favor, and the performance is already good enough. But if the routing becomes the key thing here, where does the leverage lie? Does it lie with Dizzaract, or does it lie then with the open weight models?
I think open weight models, it's becoming commodity
as well. So you think the leverage lies with you guys?
For 100%.
Not even 99%. You're not worried about this a little bit. It's 100%.
Okay, I can give a discount. Let it be 99.
Give a discount.
But it's the main question when it comes to open models, it's economy, right? And the ones who build up infrastructure to have the most efficient economy be run economically, logical, like relevant, secure, and safe. So that will be the winner.
Yeah, I'm not discounting this at all. I'd love to keep talking about this, right? Because I do. One of my theses has always been, you can have 100 companies offering a commoditized business, and the company that's actually going to win the battle is the one that sits on top of it and decides how to distribute requests. You have to get the door. Is that your doorbell ringing? Is that your food? That's your lunch.
It's fine. It's fine. No,
that's your lunch, right?
No, it's okay. No worries.
Okay. I love when the door. I haven't heard a doorbell in like 30 years. That's the greatest thing in the world. But what you're suggesting is that the company that sits at that layer above the top is going to be the one where all the leverage sits. And frankly, it's hard for me to disagree with you on that. The question is, how long does it take you to build out that infrastructure?
So we already built it up. We're right now going through heavy tests with different data centers and consumer devices as well. For last 4 to 5 months, and yeah, we are about to make it live.
Okay, one more thing and then I'll let you go because I've got another guest waiting, but I really want to ask you this. What is your view on the necessity for data centers in low Earth orbit?
When people talk about going to Mars, first question comes, maybe we fix up things here first, then we go to another planets. I think if you will check, you just research yourself how much compute power exists already in the world with SME data centers, with consumer devices. And it's not only about GPUs, right? There is already power grids exist, they are working, they are live, it just should be optimized for what's humanity is heading to. I think this is more, it's very important for sure to explore space and so on. But I think for current needs, it can be fixable with what we have. But for a future, yeah, I'm absolutely bullish about SpaceX work, what they are doing, especially with these data centers. Another side, it's a bit scary as well because, it's harder to reach if something goes wrong.
Yeah, like how do you maintain them? We could spend hours talking about that as well, but okay.
Yeah, that's my view on it.
Awesome. You were an amazing guest. We'll have to have you back at some level. I have more questions for you, but I've got somebody else waiting. Thank you so much for coming and doing this today, man. And I hope whatever's at the door for you is good for you. Thank you so much for your time. I really appreciate it. It's super interesting. I hope you had as much fun as I did. Yeah?
I really have fun and very nice questions. And thank you so much for the invitation, Michael. And have a good day.
No, it was a complete pleasure to meet you. I really appreciate it, man. Thank you so much.
Thank you.
Okay, bye for now. Okay, Martin, let's bring in our last guest of the day, Ajinkya. Hey, man. How are you? Yeah, it's great. I am doing super duper. Where are you? Good for you. Okay, look, it's great to have you here. We wanted to talk about, obviously, healthcare and health tech and how objective diagnostics and decentralized care can potentially help healthcare providers scale rehabilitation without scaling their workforce. Tell me a little bit before we dive into the details about Seamless XR.
Sure. The only XR that we do now is in the name. So we started with something which was related to virtual reality. We were looking at a surgical training use case.
Clearly.
And then we actually pivoted out of that because the internal joke for us is we went from, oh, we can help you feel things in VR to we can tell whether you can feel things or not. So we flipped the problem statement exactly 180 degrees, and that's what we do now. So we help clinicians diagnose sensory loss. This is across conditions like diabetes, spinal cord injury, stroke. Sometimes it's nerve surgery. We help them objectively diagnose the sensory loss so that they can better treat it. And specifically for stroke, we potentially now have a way of helping stroke patients actually recover sensation as well.
So talk to me about that. When somebody has a stroke, they lose sensation where? And how do you actually help them get back that sensation? And how do you know, do you know what I mean? Like, how do you know if that sensation, that sensory feeling is going to stay, how long it's going to go away? Do you know what I mean? Like, how can you predict that as well?
Sure. So what we see is about 60% or thereabouts of stroke patients, when they have stroke, they lose sensation in some part of the body. The location really depends on where the stroke happened. Typically,
you mean which part of the brain?
Which part of the brain was affected? That's right.
Just to be clear, yeah, for people that don't know how strokes work. But yeah,
That's
go
right.
ahead.
Yeah. So specifically, we see the most sensitive areas or the most important areas to diagnose are for stroke patients, specifically are the hands, because they can recover movement. But if they can't really feel anything, you really don't see them becoming independent. And actually, both of them are interlinked. So what we see a lot of times, and my clinician actually did this study as well, is that sensation and motor movement actually come back together because they're kind of in the same part of the brain. But the problem is the sensation assessment and rehabilitation is something that has been overlooked and ignored for a pretty long time. Only about 10 years of research has been, 10, 15 years of research has been done where it's starting to become kind of more important. And coming back to your question of how do you assess it, currently they literally take a filament, they press it in your skin, and they ask you to say yes when you feel it. That is a standard of care, and this is global. We have seen this.
Feels a little primitive, but sorry, go ahead.
Yeah, so what we've seen is that creates a couple of natural bottlenecks. One of them is, as you probably guess, it's not really objective. We do see some inter-rater variability. So the same patient being assessed by two different conditions could lead to slightly different results.
But also you have to be with them in person.
Absolutely. Exactly.
Go ahead.
So it's that directly leads to the second part, which is time, right? Because the most critical resource in clinical care is the clinician's own time, right? So what we're seeing
or the patient's time as well.
Patient's time as well. Yeah.
Sorry, go
exactly.
ahead.
Yeah. So essentially what we're seeing is these tests kind of end up being under administered. So because they can't really use that information to make a clinical decision off of it, right?
Right.
So then it becomes less useful, right? So what we're trying to do is make it objective, make it patient-driven. So we're trying to save the clinical time itself that is required by a person administering that test in the real world, and have the patient self-administer it, generate a report, which is objective, and then the clinician can make a decision off of that report.
So how do you do this by yourself? This is what you're suggesting, right? That if I have a stroke, and I go home from the hospital, then I can do some sort of sensory testing on my own. But not to get too meta, but if and again, my terminology is not going to be right here, so feel free to laugh. But if my sensory perception in my hand is either lost or diminished, am I actually going to be physically functional enough to be able to give a test to myself and then provide the results to you? Or are the results provided mechanically, I don't know what else to say, with a machine, so that I don't have to do anything except touch it? Do you know what I mean? How does all that work?
Question. Yeah.
Yeah.
So imagine this, right? Let's say you have a tiny air bubble that is pressing into your skin very, very gently. If you're completely healthy, if I apply a very, very little force, you'll be able to feel it.
Sure.
Right?
Yeah.
If you are maybe like slightly impaired, maybe I need to apply a slightly larger amount of force for you to feel it, right? If you're completely impaired, no matter how much force I apply, you won't be able to feel it.
Yeah.
Right? So that's exactly what we do. That's how simple it is. So we have a platform. The patient places the hand on the platform. These tiny air bubbles are randomly stimulating you at specific locations. All you as a patient is doing is using your other hand to report on a touchscreen where you feel it. And based on what level of pressure you can feel, we kind of generate an objective report. So you can think of it as like a heat map for your hand. So we'll be able to figure out which locations have a deficit. Based on that, the clinicians can figure out which parts of the brain are likely affected. And then they can use that
do we understand? So sorry, do we understand in that level of granular detail which part of which really small part of the brain is being impacted by which part of my hand?
The clinicians can figure it out. Yeah, there is a good amount of literature that can map this for sure. Yeah.
Really?
In addition to that, like if it is not a stroke, for example, like sometimes nerve injury patients also lose sensation. Specifically based on which location of the hand is affected, you would see that the deficits appear in that specific location of the nerve that was damaged, basically.
This is so interesting. Do you want to hear something funny? So
Sure.
my brother was a neurosurgeon before he retired. And his wife was a reconstructive plastic surgeon, so took hands and put them back together.
Yeah.
So maybe it's like a combination of what they were doing feeds into some of the stuff that you're doing. So what is the relationship between the PhD that you wrote and the work that you're doing now? Because there's a robotics thing involved here. I'm just curious, like where the soft robotics part is related to the sensory perception part, and then its relationship to the where in the brain that this stuff gets figured out.
Yeah, so I have a bit of a mixed background. So I did my master's in robotics, specifically focused on soft robotics, which does have a little bit of a part to play in the haptics that we're developing, although that was developed mostly by my co-founder. The other part that I did was I got bored of just doing robotics, so I took a neuroscience course.
Fair enough.
And I was like the only engineer in a neuroscience course.
You must have been blown away because the relationship between robotics and what's happening in the brain and in the spine has to be like really closely related, in the sense that how can you build a proper robot without understanding how a brain works?
Yeah, especially anything which is related to human factors, like anything which involves a human and a robot working in sync together, or like a robot helping a human recover sensation or motor movement. You have to understand both the clinical aspect, like the clinical theory of it, and also the engineering of it together. Yeah.
Do you get the sense that artificial intelligence is moving slowly through the healthcare field? And if it is, like, why is that the case?
So yeah, there's a couple layers to this. So AI, in a not so conventional sense, has been in medicine for actually much longer than some other fields.
Yeah, but
for example,
can you explain how though? Sorry. Yeah, go ahead.
Yeah. So for example, right, anything which has to do with understanding images, like mammograms to identify cancer, for example, or understanding
MRIs or
complex multi-layer CT scan to understand deficits. And the reason for that was it is definitely superior than a human in able to identify these nuances because of the pattern matching, right?
Sure.
So the nuance always when AI has to be embedded in a healthcare setting, if it is used for any kind of a diagnostic or intervention decision purpose, it's always going to end up being related to risk. So how high is the risk if something goes wrong? So a couple of questions we almost always get asked when, so we don't position ourselves as AI like for a specific reason.
Yeah. What are the reasons, just out of curiosity?
Yeah, so it's basically regulatory.
I understand.
So
okay, go ahead.
One of the things that we always get asked is, if this information is being used to make a decision off of it, what happens if it goes wrong? Like, what if the algorithm makes a wrong decision or it makes a wrong call, right? What is the consequences of that? So everything in healthcare AI, especially if it's using diagnostic, is directly related to the clinical decision that is being made off of that diagnostic. The moment you take that away and give it over to the clinician, the risk reduces a lot because you're relying on the clinical, like the input of the clinician. The only nuance to that is when you have a lot of clinical data and you say that, hey, look, I'm superior than a human, which has been done with all of the image AI.
what do we need to do to get to, like, what level do you think of clinical evidence is necessary before either the clinician or the, I don't want to say hospital, because it's not just in hospitals or whatever, where they start to say, like, this is okay for diagnostics and this is just a routine part of care, in the same way that, like, an MRI is now, like, no one questions the fact that it's actually taking a picture of your brain or your lungs or whatever.
That's right. So in very simple terms, I would say what really matters is true positives and true negatives. So it's like, let's say there's a patient who comes in who definitely has cancer. The device says you have cancer. That's a true positive. If a patient comes in and has no cancer and the device says cancer, that's a false positive, right?
Unless they haven't been diagnosed properly before that.
That's right.
Sorry.
So everything in clinical data, again, it has to do with what's the standard of care. Sometimes the standard of care in itself is imperfect. Like, for example, when you talked about the assessment for sensory testing, which is what we are trying to automate, the standard of care is imperfect. So the barrier to entry for something like that is a little bit lower, because it's very easy to justify the value that, yeah, okay, we know that whatever we're doing right now is pretty bad, and this is at least equivalent. And then there's some other benefits to it, right? For example, workflow improvement.
So,
but if the clinician is doing a great job of it,
right,
you have to position it as, you have to be at least equivalent to that, and then you have to have another layer of improvement, maybe like a workflow improvement.
What is a workflow improvement, though?
So saving clinicians time, for example, if for example in MRI, like assessing the images, let's say it takes a long time, and AI can do it in a couple of seconds. That's a workflow improvement.
So, but the MRIs I've heard now can also spot cancer and other sort of physical deficiencies way faster than humans ever could. Are we seeing the same thing? You said haptics before, did I get that right? Are we seeing the same thing in the haptic space as well? That the more data you provide to it, again, based on the simple test, but I'm sure you're doing other tests as well, that the more data you provide to the artificial intelligence, the better feedback you can give to the clinician. And this is like a virtuous circle of feedback, yeah?
It definitely is. We're probably the first company who's doing this.
Good for you.
So we will know in a couple of years whether it really helps. We are trying to build a database of sensation recovery specifically. So understanding how a patient coming in, how long would it take for them to recover, for example, specifically to understand when to discharge them, when they're safe to send home specifically.
How can you tell when they're gonna, like, the timeline for them to recover?
So we're using historical data to train our models. We haven't implemented this yet, but what we're doing is, let's say a specific condition, like a patient comes in with, let's say, a stroke, and they have 30% sensation on the left side. We've seen maybe hundreds of these before. We know that an average improvement would be 30 to 60% in, like, let's say 6 weeks, right?
Got it.
Yeah. So we'll be able to use historical data to potentially predict the range of recovery and the timeline. Yeah.
How has the reception been from the clinicians, right? Does it scare them? Are they happy to have this? Does it make their lives easier? They're just like, oh God, now I'm going to lose my job. Kind of like, what has been the reception from them and from the hospitals as well?
Yeah, that's a great question. And we've seen, usually when you do something disruptive, you see both, right? There's a spectrum. Usually what we've seen is the newer generation, like the younger clinicians, have been very open to work with us, because they have seen the issues of the manual assessment. And technically they're stronger. So, I mean, in the technological sense, they're more used to technology. So they are way more likely to adopt you. And that kind of has been the pattern for us all the while. In terms of the hospital system and even like the management side, their objective is always to mitigate risk, right? They're not trying to block a technology because they think it's not important. They're just trying to protect the patient, right? Because that is their responsibility.
But this has nothing to do. Can I make the case that this has nothing to do with artificial intelligence or the haptics that you're delivering or the fact that it's stroke? This has nothing to do with that at all. It's just that every time a new, like even for a stent, right, which is something we just completely take for granted today, but 30 years ago, I don't know when they were invented, maybe more than that. But like, when a stent was first invented, they were like, sure, we're just going to put this metal thing inside the arteries in your heart. Not a problem at all. Right. They were the same. There was the same level of skepticism. And I think, again, the younger doctors were probably just like, sure, this works perfect in a heart. And the older doctors are like, I don't know if I'm putting anything in there, kind of thing. So it's not related only to what you're doing. It's just, this is the philosophical way that healthcare works. Yeah.
Absolutely. Okay. And I think that's a good reason for it as well. Because Yeah, in the end, it's the patient's, it's a person's life at the end of it, right?
Yeah, and a person's health, which, as we know, is the most important thing anybody has. But I just wanted to make that point so people understand, like, it's not related to the fact that artificial intelligence is scary or something that's happening in this space is scary. It's just that, like, this is just the way the healthcare system works. And as you said, for good reason. Can I ask you this, though? As you gain more and more data over time, first of all, do you expect, you said you're the only company doing this, do you expect other companies to come in and try to participate in this space? And the answer to that has to be yes. But if you do, as you get more and more data, are you then suggesting that the clinical results and the clinical way you can then do predictive analysis on when people are going to get better or when this is actually going to happen is just going to get better as well?
Yeah, so we project about 2.5 years of data when we will be able to build this model.
Yep.
And this eventually will become our moat, we believe. But yeah, the aspect of like understanding when people will get better is actually really important for the hospitals themselves.
Yeah.
Because if they discharge a patient too early and there's a complication, the patient comes back, that money is actually, in most countries, is coming out of the hospital's own pocket because they're not getting reimbursed again for a patient that has been paid for, essentially, specifically in the US as well. If we discharge a patient too slow, we're now blocking a bed in acute care, which is also costing the patient and the hospital more money.
Right.
So understanding when to discharge him is actually, it's a economic decision for the hospital. And we see a lot of adoption for technology almost directly being driven by this kind of like economic decisions. Yeah.
Has the, I want to ask this the right way. Does building this in Singapore, has building this in Singapore over time become like a better place to do this? Like in my mind, Singapore is just very progressive when it comes to any kind of technology, any kind of innovation. But do you get support from the government where they look at what you're building and just think, hey, this could actually be a technology that can be used globally, and if it's developed in Singapore, it benefits Singapore from a healthcare perspective? And it appears to me that Singapore is investing a ton of money in healthcare technology anyway, and is trying to get scientists and clinicians and doctors to come into Singapore to provide better healthcare, again, not just for its existing clientele, but to make sort of healthcare in Singapore world famous.
I do believe that is a strategic direction for the country, and we have gotten like grant funding to help us get this far as well. So for sure, yes. The government, I think, also recognizes there is a little bit of a dearth of like early stage capital, especially flowing into deep tech, especially in the current macro.
Yep.
And they're trying their best to help as well. You saw recently with RIE 2030, they allocated more funding. I think it's 37 billion over the next 5 years, if I'm not wrong, for RIE 2030. And they also allocated specific set of this funding for slightly later stage, like more growth stage companies, because that is where the void is. So yes, I do believe that things like AI and healthcare specifically are two of like the pillars that they're trying to build towards, and we do get help from them. Yeah,
makes sense. Let's just, for people that don't know, RIE is Research, Innovation, and Enterprise. It's like a 5-year plan, 37 billion Singapore dollars, which is, let me see, 721, 15. It's like 28, 29 billion US dollars. Let's just call it $30 billion. Launched in December of 2025, so about a year ago, and it's a 5-year plan to actually do this. So $37 billion, a lot of money. So good for you to be able to at least get some kind of granting from that as well to do this really important work. Yeah. Okay, man. Yeah, this was a great way to end. Thank you so much for spending so much time with us for this super interesting stuff. I'd love to see progress on this.
Sounds great, man. Yeah. Thank you so much for having me.
No, it's my complete pleasure. And thank you so much for doing this. It was great to meet you, and keep up the good work.
Thanks so much.
Thank you. Okay, man. Bye for now. Okay, that's it today for ATP Insights. Just another really killer show. Some really, really great stuff getting built in the region. It's nice to see really smart people building really, really great stuff. Thank you to everybody who joined us today. Thank you to all the guests who came in and actually gave us really great insights. Everybody who has watched or who will watch, give us a thumbs up on the video. It definitely helps us in the YouTube algorithm. Subscribe to our channels across the board. Subscribe on YouTube. Follow us on all of our socials, on X, on Instagram, and on LinkedIn. The more comments, the better. The more questions, the better. Be as interactive as you possibly can be. We love it. My name is Michael Waitze. Thank you again to Martin Runford, and I'm going to say goodbye for now.